Manny, you can't sit there, girl. Come here. You can't sit there, baby. You can't sit there because my feet are going to be there. My dog is so funny. What's up, guys? Good afternoon. Good afternoon. I hope everybody is doing great. God is good. I am blessed. I am up another day. And man, have y'all seen what's been going on? Have y'all seen what's been going on with the stock market, baby? Nah, we had some breaking news. Trump actually finally has shown a negotiation with another country when it comes to tariffs. So I think that's important. We're definitely going to check that out. But before we do that, we just have to. Oh, this shit is live. It is live, actually. I'm going to put it on now. But we just have to look at these daily devotionals before we do that. So let's start with God. All right. So here's the first verse here. So this is a tip from the master chef. You are the salt of the earth, but if the salt loses its saltiness, how can it be made salty again? It is no longer good for anything except to be thrown out and trampled underfoot. Matthew chapter 5, verse 13. Followers of Jesus have a big impact on the world around them because they are followers of Jesus, not because they're better than the rest, because they follow Jesus and his life is in them. They bring flavor and meaning, this because of their connection to Jesus. However, if they go about proclaiming Jesus' name without his light in their lives, they are worse than those living in darkness. Such people bring false hope. They let people follow them to receive hope, but let them turn back disappointed and in despair. Such testimonies are trampled on by the world. And, you know, this says a lot about what goes on in society and why people a lot of times are turned off by faith, by God. And sometimes it's religions, sometimes it's churches, sometimes it's, you know, bad actors that are using God as a way to, you know, as a way to get something that has an entire, you know, an entirely different alternative motive. And we've seen many of that. But we have to know that exists, right? And that doesn't define, you know, what a follower of Jesus Christ is. So, essentially, take great care when you identify yourself with Jesus and claim to be his father. If you lose your integrity as his follower, it's very difficult to regain it in the eyes of the world. So take great care. If you are proclaiming to being a son of God, a child of God, and to be a follower of God, man, you better have great integrity in that. You better have fear in God, but not just that. You better believe that people are watching. And the moment you get pointed out as being a fake follower of God, it's hard to come back from that, essentially is what he's saying. All right, so that was my daily devotional. Let's go on to what's going on in the world. And I'm going to update you guys on some trades that I did recently. So
watch this. I mean, you saw
see if
the
I can
stock
hear.
market decline sharply after Liberation Day, and it's rallied back since then.
Well, now it's going to really rally because, you know, don't forget they said this is all a pipe dream. And this is a tough one. This is, somebody would say, well, this is easy. This is much tougher, I think, than any other deal because they've been at it for so many years, decades, trying to make this deal. And it's very conclusive, and it's a great deal, and it's a very big deal, actually. And no, this is just the beginning. We're going to be having conferences, or at some point we won't have. We'll just put
Let's
out
go.
a statement that we just signed this country, that country, and after a number of these are done, nobody has enough people to do it. We're just going to put out X country is going to pay this, and if they open up, they're going to do this and that, and they're going to be open up. Everybody wants to be here. I say this is where they want to be shopping. They want to shop in this country because we have the consumer. And we have the consumer like nobody else. And, you know, if this country went bad, the whole world would go bad. But we really saved it from going bad. Yeah, please.
No, can I ask you about the air traffic control issue? Are you looking at getting new software, new equipment?
I'm glad you asked me about it because I'm just going to be talking to now with the heads of the airlines and everything else. So I was all set before we had the rigged election. to give out a brand new gorgeous system to one company that was going to do the whole thing, one of the best companies in the world that you know very well. You know, there are 3 or 4 of them that do it. And when they took over, Buttigieg, who has no clue, you know, he drives to work on his bicycle with his, in all fairness, with his husband on the back, which is a nice, loving relationship. But he didn't have a clue. This guy didn't have a clue. And he's actually a contender for president. Between him and Crockett, you can have that party. But he didn't know what he was doing. And he took what they call dry systems where you have wires in the earth, buried in the earth or whatever. And then you have the open air systems where you have satellites. And you can't mesh them. Anybody would know that if you went through about 2 months of study in school, if you studied that kind of thing. And he did. They spent tens of billions of dollars trying to take old, broken equipment and merging it into existing new equipment with brand new equipment. It's one of the greatest. They spent like $40 billion. And what they did is they made it worse because it doesn't work together. You can't make it work together. If you have a satellite system, you need satellite. If you don't, they had all these different technologies, some of them 50 years old, and they're trying to mesh them in. And they end up spending twice the money they should have. You could have bought a whole new system. So we have a very good guy who you all know, Sean Duffy, is head of transportation. And I've given him a 10-minute lesson in buying, and he's become really good. And we are now in the market to buy a gorgeous, brand new system. The helicopter that crashed into the plane at 400 feet, it shouldn't have been. What would have happened is all sorts of bells and sirens would have been going off 3 minutes before that accident happened, if you had the right equipment, but they didn't. And the new equipment is unbelievable what it does. You can have, you don't even, well, I was going to say something, but you always, in my opinion, you always need pilots. I want pilots. But you wouldn't even have to have pilots. This system is so incredible what they can do. But we have a system that's obsolete. And what they did is the worst. They tried to combine the really old, broken stuff with the new stuff. And you can't combine it, and anybody should have known. So Biden, you think Biden figured this out? I don't think so, fellas. Do you think he has any clue? He doesn't know what the hell's happening. So here's the story. We're going to be buying a brand new, it's going out to bid very soon, brand new state-of-the-art system that will cover the entire world. I'll give you an example. When my pilot, now I have military pilots, but prior to that I have very good pilots, great pilots. They would land, and I won't tell you which country, but they would use the system of another country. They wouldn't even use the system of the United States. So if I'm landing in New York or Florida or Tennessee, they're using a system from another country. I said, why is that? And they were, you know, they're not into business, but they're just saying, our system doesn't work, sir. And I said, boy, that's pretty sad. But we were all set to give it out to, you know, look, you have a Raytheon and you have different companies like that, numerous companies. And you have companies that would do it, like an IBM, as an example. And you give out one deal, one contract. They gave out hundreds of contractors. They had diggers. They had non-diggers. They had people that focused on satellites. They had hundreds of different contracts. One contract where one guy is controlling everything. If you need a trench, then they dig a trench. But if you don't dig the trench, they don't blame you. What happens is you don't dig it, then they say, we want a cost overrun. Now, we have it all set, and we're going to be doing it. And we would have done it, except that the election took it.
Sometimes it's hard to understand what he's talking about. But real quick, I wanted to break down this whole UK-US trade deal. This is the first one that I know has actually gone through, and the stock market is booming. I need to go look at my stuff and see what opportunities I have and what trades I need to close. But essentially, there's an automotive tariff. Tariffs on the UK car exports to the US will be reduced from 27.5% to 10% for up to 100,000 vehicles annually. I think that's great. Okay? And that's covering nearly all UK car exports to the US. Okay, I want to know, what about our cars to the UK? Steel and aluminum. Tariffs on UK steel and aluminum exports are eliminated, replaced by a quota system facilitating continued access to the US market. Beautiful. Agriculture. The UK will allow tariff-free imports of US ethanol and increase access for American beef and machinery. Beautiful. The UK has agreed digital services tax. The UK has agreed to ease or potentially eliminate its 2% digital services tax benefiting major US tech firms like Amazon, Meta, and Alphabet. Pharmaceuticals and supply chains. The deal includes provisions for a more secure pharmaceutical supply chain and establishment of a US-UK aluminum and steel trading zone. This is great. Economic impact. The Trump administration projects that the deal would generate $6 billion in tariff revenue and create $5 billion in new export opportunities for the U.S. industry. Financial markets responded positively, with the S&P 500 rising by almost 1% and the U.S. dollar index increasing by a little over 0.5%. This agreement is seen as a strategic movement to solidify U.S.-UK economic ties amid broader global trade tension. It also serves as a model for potential future agreements with other nations, including, now this is going to open up. We're going to see a lot more trade deals come in. This is amazing for the stock market, man. Amazing for our economy. It was scary. I mean, it still is scary. We ain't all out, we ain't out in the clear, but it's a way better sign of things to come. And so I want to show you guys real quick. Let me check my fidelity. Hold on. Ooh, yeah, we're doing good. All right, so yesterday I put in a trade. For those of you guys who were following me yesterday, remember I put in a trade for this right here, Palantir. Where is it? This one right here. I sold a put yesterday live for Palantir. I'm already up almost 60% on that trade. So I'm going to close out this one, Hood. I'm going to close out Tesla because I'm already 80% in and there's 3 weeks left on that 30-day option. You might as well close them and find another trade. So let me go ahead and close these. Lock in my profits there. Because our ROI matters, guys. How quickly you make the money matters too. So I'm closing these trades, and then I'll be able to find hopefully some more options this month that I can print. So let me close this Hood. I might just get right back into Hood and Tesla, to be honest. I just got to look at what the prices look like. By the close. All great stuff. Locking in these profits, guys. Locking in these profits. Shit, Palantir is is 60% up in a day already. Gotta love it. Everything's looking beautiful. Okie dokie, where are we at? So this is great news. Shout out to man, because all of this talk, all of this pain, and I'm just grateful that finally something actually goes through. Because everything's like, oh, we're in talks, but nothing was actually happening. So let's watch it from the beginning because I caught it live, but it was kind of towards the end.
Especially in agriculture, dramatically increasing access for American beef, ethanol, and virtually all of the products produced by our great farmers. And our secretary, as you know,
What's
of
up,
agriculture
everybody?
is here. Brooke, thank you very much
Thank you.
for being here.
It's a good day. Thank you, sir.
You'll let the farmers know. In addition, the UK will reduce or eliminate numerous non-tariff barriers that unfairly discriminated against American products. But this is now turning out, I think, really to be a great deal for both countries because it'll be really great for the UK also. So they're opening up the country. Their country is a little closed, and we appreciate that. They'll also be fast-tracking American goods through their customs process, so our exports go to a very, very quick form of approval, and there won't be any red tape. Things are going to move very quickly both ways. The final details are being written up in the coming weeks. We'll have it all very conclusive, but the actual deal is a very conclusive one. We think just about everything's been approved. So good for both countries, and we'll also receive new market access for American chemicals, machinery, and many other industrial products that weren't allowed, and they'll end up getting products that they'll be able to price, and if they like them better and we make great products, they'll be buying those products, but they were not available in the UK. Furthermore, in a historic step, the deal includes plans that will bring the United Kingdom into the economic security alignment with the United States. That's the first of its kind. So we have a big economic security blanket, and that's very important. And we feel very, very comfortable with that because it's been a great ally, truly one of our great allies.
This is a really fantastic, historic day in which we can announce this deal between our two great countries. And I think it's a real tribute to the history that we have of working so closely together. Can I pay tribute, Donald, to your negotiating team as well, particularly yes. Howard and Jameson, who've done an incredible job, a very professional job, and my team as well. Two negotiating teams have worked at pace now for a number of weeks to bring in this deal today. Really important deal. This is going to boost trade between and across our countries. It's going to not only protect jobs but create jobs, opening market access. And as you say, Donald, the timing couldn't be more apt because not only was it 80 years ago today that victory came for Europe after and at the end of the Second World War. But of course, on that day, the UK and the US stood together as the closest of allies. And Donald, I think even down to the hour, because you may or may not know that it was about this time of day, exactly 80 years ago, that Winston Churchill announced victory in Europe. And that led to great celebrations across Europe, across America, but particularly in the United Kingdom. Literally people going out into the street, putting bunting up, going up to the palace. And so to be able to announce this great deal on the same day, 80 years forward, almost at the same hour, and as we were 80 years ago, with the UK and the US standing side by side, I think is incredibly important and makes this truly historic.
That's cool. That was the Prime Minister of the UK.
I don't know.
So great news, man. Good stuff. Good start to my day. Well, not start to my day, but good start to our lunchtime. All right. With that being said, man, I wanted to check out Shopify. I was looking at Shopify's financials. Let's take a look at it. I am heavily in Shopify. I use it. It's part of my life. And I think a lot of people use Shopify. Most e-commerce, most brands, most websites, when you order online, they're using Shopify. And so when you look at the company's financials as a public company, you can see it's selling at $91. Shopify shares are trading lower. The company reported Q1 financial results. It wasn't good, apparently. And you guys can see that the price has been going down. Let's look at it historically. You guys can see it's going down. You know, it's nowhere near, 52-week highs or anything like that, I don't think. But look at the financials. Revenues continue to grow. If we look at it quarterly, we can see it didn't beat earnings, but it's still growth. It's still growth. So we got a drop in price because it just, they wanted more growth, right? But we're in crazy times and it's going to get worse. So I'm not sure I'm ready to buy Shopify, but I do think it's going to get worse. I do think in the next, if I'm selling 30-day puts or something like that, I think it'll be fine. But when earnings comes out, I don't know if Shopify is going to be doing better just because of the trade wars that were going on. Now, I don't think it'll be as impacted as a lot of people think, because people are figuring out how to get the product here without paying the tariffs. Either way, whether their factory has a plant in Vietnam or Africa or some shit like that, or they took advantage of de minimis for a while and just kept shipping a whole bunch of stuff. Now that de minimis is not available, is canceled. They can't use that, but there's loopholes that a lot of people have been using. So I don't think it's going to be that bad when earnings does come out, but they probably won't be earnings. But that's also priced in already, I would assume. But if you look at their financials, bro, always climbing. Revenues look great. It's a profitable company. Free cash flow of $1.6 billion. Earnings per share is there. They got a shit ton of cash. They got no debt. Shares outstanding is growing, but it's also a new company. It's a growing company. Let's look at their expenses. CapEx, they're spending most of their money on research and development and marketing, which is great. I'm okay with that. Their operating expenses are $410 million. It's not horrible. It's a great product. It's the best product by a mile in its space. So I think it's a great company. It had terrible earnings, so the price has gone down. It's probably a good time to buy this stock or to sell puts on this stock at a price that you would definitely like this stock. So if we look at the price, right, and we're looking at it for the past year, a year ago it was at $59. Okay. October it was at $80. Right now it's at $90. Okay, and it's dropped in April all the way to $80. What's the chances that it drops below $80? Well, I mean, it didn't drop below $80 in November, so it almost feels like this is the new low, where the last high was. You guys can see the last high was $80. The new low is $80, and it hasn't really gone below that. And so what's the chances of it going from 90 to 80? Probably pretty slim. That looks like a price of resistance right there. And so let's go look at the options chains. But before that, I want to hear from the CEO of the company and see what he thinks of the forecast, the future. What is he saying ever since earnings and the reaction of the market?
Shopify shares under some pressure this morning. The e-commerce company reporting a wider quarterly loss, operating income below estimates. Revenue did exceed consensus, though. Shopify's president, Harley Finkelstein, joins us here first on CNBC. Harley, good to talk to you again. Thanks for joining us.
Great to be here, Carl. Thanks for having me, as always.
Some are pointing to the current quarter guide, although I imagine you're going to argue you're hanging in there fairly well, given some of the tensions that have been introduced.
Well, certainly. I mean, I think the results show that we are further establishing ourselves as a leader in commerce. If you look at the quarterly results, even in an uncertain market, revenue was up 27% to $2.4 billion. Free cash flow margin hit 15%, and it was our 7th consecutive quarter of GMV growth above 20%, which I think speaks to how well merchants are doing. So my hope is that it should be pretty obvious to everyone that Shopify can balance both growth and profitability. But as you're sort of alluding to, Carl, in a very unpredictable market, this is sort of where Shopify's superpower of agility really comes into play. We built this business model that allows us to really adapt very quickly and pull the right levers. And for the millions of retailers on Shopify that have built their entire businesses on us, I don't think we're just a tool for them. I think we're a huge advantage. In fact, I first came on this show like 10 years ago at the IPO. It's been about 40 quarters now. And actually, if you look since that time, since the IPO, since 2015, the growth rates of 38 out of 39 quarterly cohorts of merchants on Shopify have actually outperformed the overall e-commerce market. So I think especially in tough times, businesses are just better on Shopify.
Can you talk, you mentioned this on the call, these tools you have that allow merchants to achieve compliance with even new tariff announcements as they're announced?
Yeah. Look, as I said, Shopify was built for times like this. We've been at this for 20 years now, for 2 decades. So whether it was 2008 or during the pandemic or right now, our objective, our mission is to shoulder complexity so our merchants don't have to. And I think our velocity and pace of innovation is unmatched. So for our merchants right now, that means giving them all the tools they need to adapt to tariff changes or macro changes. And so whether it's building tools like duties calculation to help with cross-border payments, we built a buy local filter over a weekend when the tariffs were first announced to allow consumers to buy directly from merchants in their countries, managed markets, or even things like, duty collection, how to display and collect duties during checkout. Our job is to give merchants every tool they need to give them all this optionality and let them choose the ones they need to best address these macro changes and this tariff environment.
Harley, in terms of, you did have some comments about the consumer and how the merchants you serve seem to be perhaps better positioned. But what can you say about overall trends, whether that means pull forward of demand in some areas or just the run rate right now of spending interest?
Yeah, Mike, look, we're not seeing any changes as of now in our merchants. Our data shows that we're actually gaining market share in both the U.S. and Europe. And if you look at our data through April, it does not suggest a slowdown. However, I think it is still early to assess the entirety of the potential impacts. But again, as in times of disruption, this is where we do well. One of the other things to keep in mind about the benefit of the Shopify business model is that we have merchants everywhere, all sizes, across every geography and every vertical. So our merchant base is not concentrated in any one particular geography or any one type of industry, including even B2B. We have a huge B2B business now that focuses on automotive and industrial. So I think generally merchants on Shopify are doing quite well still.
You've made the case that you're equipping your merchants to kind of handle whatever comes, although there is this sort of thinking on Wall Street that it is the entrenched large players that have a real advantage here in this environment when it comes to figuring out where they can get their vendors, negotiate price, and handle whatever pressures come from these trade measures. So is that something that you feel as if the playing field has become less balanced?
Well, I mean, for the larger merchants, the larger retailers, which we're acquiring a lot of right now. I mentioned the call companies like VF Corp and LVMH, JW Anderson, and even Caring Beauty are coming to Shopify. So they kind of join our roster.
What does Buffett say? When investors are fearful, be greedy. When investors are greedy, be fearful.
Very large brands like Dior and Mattel and Alo and Supreme. But the smaller merchants also have a huge opportunity because they're able to be a lot more agile, to be a lot more flexible. So across the board, our job is to arm them with every tool they need.
So this is what I meant. Sorry to keep pausing, but this is what I meant by, I don't think the tariffs are affecting Shopify users as much as people think. When you're smaller, you can be much more creative, move quicker. You can take advantage of certain little things that big companies are just too big to be making certain moves to avoid certain tariffs. It's just not possible for them. So those big brands are definitely using Shopify, and they're definitely probably why earnings didn't meet the way they did. But I do think that the smaller vendors are going to make up for some of those sales because they're going to have inventory probably. It's the bigger vendors that aren't going to have inventory. And so there's going to be some type of balancing. Will it make up for the big brands and their loss of sales? Probably not. But will it be as bad as people think and what's probably priced in right now with this pricing, with this drop in pricing on the stock? I'm not sure, but I'm willing to bet that it won't go below $80 just based on what I'm seeing here. Because I don't think it's as bad as people think it is. And now that I'm seeing Trump work with the UK, I'm going to assume that there's going to be some more. I'm going to assume that when they were saying that they're in talks with 17 other countries, they weren't lying. And there's some more trade agreements that are going to come to the table soon. But let's continue. Let's finish watching this.
They need, and then let them decide. But again, across the board and throughout April, we had not seen any slowdown whatsoever.
Harley, I hate to ask you about another corporate, but the conference call from UPS keeps coming up in conversation because Carol Tomei, the CFO, talked about how many of their clients are small businesses single-sourced to China, and that she thought that was infusing a lot of risk, at least in our own economy. Is that a view that's held by you or are those among your peers in Canada?
Well, in terms of China, I mean, exposure does vary by merchant. Some are going to be more impacted by others, but net, we're not seeing meaningful impact on GMV. Obviously, Carol and UPS is one of our shipping partners as well, so we see what they see. But generally, I do think that small businesses tend to be a little bit more nimble. They tend to be a little more agile, that they can make changes a lot faster. And so as of now, we have seen no changes. Obviously, we'll keep monitoring that as well. But our job, if we want to qualify, I mean, right now, about 12% of all U.S. e-commerce flows through Shopify. We're the second largest online checkout in America. In order for us to qualify to have this leadership position, to be the trusted platform for millions of brands, big and small, our job is to give them every tool they need. And if you look at our velocity of product shipping right now, it's unequivocal. It's unlike anybody else, and we'll continue doing that in the future.
Can't believe it's been 10 years of good conversations with you, Harley.
I've really enjoyed
always
it.
Good to see you, as always. Harley Finkelstein joining us.
Cool. All right, so that's good stuff.
Senator.
With that being said, let's go ahead and look at the options chain right now. We're going to do June 6th and June 13th. So I think that's like 28 days versus 40-something days. We are going to sell puts. And I want to see all the strikes. Let's apply this. Let's see what we're looking at here. Okay. So the price currently is 92.97. I don't think it'll drop below 80, but let's see where we're at as far as a delta. So the 20 delta is $83. I'm willing to make that bet because if I do get assigned these shares, I'm okay with buying Shopify at $83 because I do think it's going to turn around in the long term. So let's go ahead and do the math on this real quick. Let's see what kind of return I'm looking at here if I collect this premium. And so we're going to do 100 divided by the strike price, which is $83, which is 83. And then we're going to multiply it by the premium, which is $2.13. And we're looking at about a 2.5% return. I probably am okay with $84 just to get a little bit more of a return, but I'm not going to be greedy. Let's go with 83 just in case because it could drop some more. You know, I'm not 100% sure that this is priced in correctly. So I'm going to be conservative and stick with the 20 delta. And so I don't like buying it here on my desktop, so I'm going to buy it here on my app. So let's go to Shopify. Okay. And we're going to go to the options chain here. And again, we're going to, we said, what was it? 83. And let me just make sure because it might have updated what the delta is here. That's not right. Oh, that's because I got the wrong date. You know what? I might do June 6th. Let's see what June 6th is showing me. June 6th is 83 still. So I might as well buy myself an extra few days. And oh no, the premium's a lot lower now. It went down to $1.43 a share. Oh no, that's because it is June 6th. So let's see if it's $1.43. Let's do the math on buying myself an extra week. So 100 divided by 83 times 1.43. Now we're going to do June 6th because that's a 1.7% return. We're going to do June 6th instead. So let's go back to the options chain. I need to make a screen so you guys can see what I'm doing on my phone. I'll do that in the future for those of you guys who want to be able to see what I'm doing a lot better. So we're at June 6th. We're going to go to, damn, it went down to $1.62. Oh no, I lied. I was looking at the last. I wasn't looking at the bid and the ask. Let's see what the math is on that. So it looks like 83 is $1.62. 100 divided by 83 times 162. That's still 2%. I don't love it. That's 1.95%. What should I do here, guys? Should I just go to the 84? All right, I'm gonna do the $85 strike price. It's at $93. I'm gonna go with the 85. And let's see how many I'm gonna buy. Let's see. I might do three contracts. So I think I'm gonna do 3 contracts, make $600 in the next 30 days, in the next 3 weeks. You know what? I'll do 4. So I'm gonna make $840 hopefully in the next 3 weeks. So boom, order placed. There we go. So what I essentially ended up going with, if you look at my screen, is I ended up going with June 6th. So that's 3 weeks out. I usually do 30 days out, but the return wasn't there. And I got some conviction here. I love the product. I looked at what the CEO was talking about. I understand the macroeconomics. I looked at the financials of the company. Everything looks decent. People are just scared. And so what I ended up going with is the $85 strike price. I got it at $2.19, the premium. So, and I bought, was it 3 contracts or 4 contracts of that? 4 contracts of it. And in 3 weeks, we already got the $840 in premium, but in a few weeks, we should be expecting a nice return. And that's it, man. I've been showing you guys, I do this stuff live with you guys, and I've been making money. I showed you guys Palantir. I did yesterday. Palantir, I sold puts on yesterday because it was trading lower than normal. And let me show you guys how Palantir is already doing. Look at this, guys. I am already up 56% on that Palantir trade that I did yesterday. And so once this hits 70%, 70 to 80%, depending, I might wait till 80, but once it hits 70%, I might close it out, because why would I wait another month for the rest of it, for the rest of the premium? No, I'm just going to close it and I'll enter into another opportunity. So this Shopify one ain't starting out great, but it is what it is. I don't know if you guys are learning stuff from that, but I have a lot of fun doing that. All right, since we're on the topic of stocks, let's go ahead and watch one of my favorite educators in stocks, the Swedish investor, who I've paid for consulting, who has taught me a lot. I learned how to evaluate companies through this guy, and so he's going to talk about stocks that return 100 to 1, and these are called 100 baggers. So a bagger is like a multiplier. And if for those of you guys who have never read this book, I highly recommend this. This book is fire, bro. Let me show you guys. This is one of my favorite books, and it's a gem, bro. It's a hidden gem. It's not the most popular book in the world, but this book, man, this one right here, let me show you. Boom, The Dondo Investor. I highly recommend this book. And I would say, get the audio version. Get the audio version by Monish Pabrai. The Dondo Investor by Monish Pabrai. Does he have any other books? No, he just has them in different languages, it looks like. Oh, no, look at this. Perspectives on Investing. He's got some other books in different languages. Oh, no. He's got another book here. I don't know if that's him, though. But this book, The Dondo Investor, is a banger. It's a hidden gem. Highly recommend you go check it out. I've already talked about the trade deal. Yeah, eBlends. I'm glad you're on it, though. It's printing money. It's everything we expected, right? And so now we're gonna start getting some momentum, I think, of other countries coming to the table. So it was volatile as hell, but this is great news, and my portfolio is doing great right now because of it. With that being said, man, let's go ahead and watch this video of the Swedish investor. Definitely highly recommend you guys subscribe to this channel, learn from him. Let's watch 100 Baggers, and I'll give you guys
Main
my
takeaways from
commentating.
100 Baggers.
Commentary.
Stocks that return 100 to 1 and how to find them. Written by Christopher Mayer. Before we jump into the takeaways, a quick explanation of what a bagger is might be appropriate. It's an expression from baseball, where a base is also referred to as a bag, and a 10-bagger is 2 home runs and a double. Bottom line, a very successful play. The term was coined by Peter Lynch in his One Up on Wall Street. There, he references to these 10-baggers, which are stocks that increase 10 times in value, and he also reveals his investing strategies on how to find them. This is a book about 100 baggers, which are stocks that increase 100 times in value. $10,000 invested in a 100-bagger turns into $1 million, a staggering increase. Managing to pick just 100-bagger in one's lifetime will probably secure your personal finances and can potentially finance a retirement. For this book, Christopher Mayer studied 100-baggers during the period 1962 to 2014. In total, 365 companies and their characteristics were used to draw the conclusions in this book. Let's take a look at Christopher Mayer's suggestions on how to invest in stocks that return 100 to 1. Takeaway number 1. Buy puppies. First things first. You must look for companies that are able, basically from a mathematical standpoint, to become 100-baggers. Large companies are not necessarily bad investments, but if you are looking for 100-baggers, these should not be your priority. If you look at Microsoft or Apple, for instance, they already have a market cap of around $1 trillion, which means that you must be quite creative to imagine that either one of them will grow 100 times from here. And would one...
And this is one of the things that I tell people all the time, like, yo, should I get into Bitcoin? Yo, should I get into Microsoft? Should I get into even companies like NVIDIA? I say depends what your goal is, right? For me, I like companies that are going to have consistent growth. I don't need 100 baggers. I don't need, 500 bag. I don't need that, right? I don't need 100x returns. I want to earn cash flow. I have businesses already that have 100x returns, and then I can pour that money into the stock market, into companies that aren't volatile, which is the index for me. But then I can also make cash flow by selling puts and all that. Now, if you don't have a business that makes cash flow, then you probably want to invest in companies that have an opportunity to double, triple, quadruple in price. The thing is that a lot of you guys are investing in companies that have already taken off because that's what everybody's talking about. That's what's viral and all of that. But what's the chances of Microsoft 5xing in the next few years? Slim to none. It would break every record. It would be the biggest company in the world ever by 5 times. The probability is almost non-existent. So that's why, even Warren Buffett, if you looked at how he used to invest when he was building wealth, he wasn't going after large cap and mega cap stocks. He was going after the mid cap or the small cap stocks, but he was going after great companies, looking at their financials and investing in the stuff that people were sleeping on. He was value investing. And so, Microsoft is great company, and I would definitely buy it for the right price. But if you want to get wealthy from stocks and you don't have any other, forms of income or ways to build wealth, and all you're relying on is the stock market, then you want to find companies that have the potential to 100x, which isn't NVIDIA. It's not Tesla. It's not, maybe in 30 years and 20 years, yes, but not in the next, 3 to 5, where and that's the opportunity cost that you're looking at. That's what he's explaining here.
One of them achieve that, they would be roughly 5 times larger than the US economy is today.
See? Yeah.
Instead, concentrate your research on smaller companies, the puppies, that can grow, say, 10 to 20 times and still be regarded as small. The good thing is that you don't have to find, say, Apple, while the founders are still working from their garage, or Starbucks, with only one store selling coffee beans. Even many years later, there were still opportunities to hop on the wagon and enjoy hefty returns in these companies. There are approximately 4,000 domestic companies listed on the US stock exchanges today, among which approximately 30% are small puppies, so-called microcaps. This is a vast area to explore, and somewhere in this pile is the next Apple or Microsoft. With that said, you should perhaps not look at the smallest companies either, with unproven products and no sales. In the study that gave rise to this book, the 365 companies that later experienced increases of 10,000% had median sales of $175 million. Christopher Mayer suggests that you should draw the puppy line somewhere around $1 billion, but avoid the puppies who aren't even born yet. Takeaway number 2. The twin engines. Something that the 100-baggers of the last 50 years have had in common is growth, in all its dimensions. Christopher Mayer suggests that you should invest in companies that can enjoy both a strong growth in sales, but in valuation multiples as well. Growing sales, combined with, for example, growing the price to earnings multiple, is something he refers to as the twin engines.
Okay, so before we move on here, a couple things. I want to answer the question from E. Blends. You're 21. What do I think about VOOG versus VOO? Okay, so VOOG is the growth version of the VOO index fund. So they're focused on more of the growth stocks that are in the S&P 500, where VOO is the entire S&P 500. The difference is going to be volatility, and it's going to be the opportunity of growth. But there's also opportunity. There's also the disadvantage of when there's declines in the market, VOOG is going to come crashing harder. Now, with that being said, in my son's Roth IRA, I have a growth index in there because he's 14 years old. He has plenty of time to get through all the volatility. You're 21. As long as you don't need the money anytime soon, and for the next 5 years, let's say, you know you're gonna keep it in that index fund. I would put your money in there. Why not? Yeah, definitely. I think you have plenty of time to go through the pain. Now, if you were older and you're gonna need the money soon, I would tell you don't do that. But I'm not a financial advisor, but I think it makes total sense. I don't see any reason why you couldn't be able to do that besides needing the money. Now, with that being said, look at the twin engines: growth in sales and increase in multiples. So growth in sales is going to be just growth in revenues. Increase in multiples is going to be earnings per share. So if we go to a stock ticker, okay, like Celsius, let's say, here's Celsius, and I'm going to tell you guys a story about Celsius that'll blow your mind, okay? You guys can see, oh shit, revenue keeps growing, right? And then you can come down and you can look for earnings per share, EPS, if I can find it. There it is, EPS. And you can see, oh yeah, EPS is growing. EPS is growing. So that's a good sign as well. Now, we can look at this from a more detailed version. You can see it looks like it's starting to get stagnant. It's starting to stabilize a bit here. It's getting a little funky. And so I'd want to know what the plans are to get this looking more like this, But annually, it looks great until you get a little bit more microscopic. Let's look at quarterly, the rest of it. Free cash flow is still very good. Okay, so I would have to do some deeper research, but I want to tell you guys, I found this stock back in 2019, 2020, and I shared it with all the barbers that follow me. And the reason why I found this stock, being a small cap company, was because they are present and they are headquartered in Florida. And so I would see their energy drinks, in different stores. And then I saw it everywhere. And then one day I was drinking it on a live stream. Somebody said, yo, these just launched in New York. They're freaking amazing. How you like them? And I'm like, yo, where the hell, where is this company from? I thought they was already big. And then I realized, bro, I was so early to the game and I loved the product. And then I looked at the financials and the financials looked great. And I looked at the CEO and what he was talking about and it looked great. And I started buying the stock, bro. When I tell you, I made like 800% on my money. That was almost a 100-bagger. If I would have kept it, I sold it in 2022 right here because I got excited. But if I would have sold it, if I would have kept it longer, actually, where did I sell it? Yeah, I sold it like I got excited right in here. I think I got excited like in 2022. But I rolled this whole thing up. I was like, this shit's amazing. And then I sold it. But look how much higher it went. This is why I tell people all the time, like, you got to be, if you like this stock, you got to be in it for the long term. I got excited, held it for like a couple years, but look what happened in 5 years. If the fundamentals stay the same, keep the damn stock. So this is a real life version of what they're talking about in this video that we're watching. Celsius isn't sexy. You don't hear a bunch of people talking about it. It's not NVIDIA, it's not Tesla, it's not Apple. But Tesla, NVIDIA, and Apple ain't doing this in a couple years. That ship has sailed. Not saying it's not a great company to buy. For me, I still buy it. Because I'm not trying to build wealth from, stocks like this. Although I will buy them if I see the opportunity, it's not the focal point of my investing plan. And you have to have discipline. All right. So let's finish this video. I just wanted to share that to give this a little bit of, edify this a bit more.
Let's start by having a look at the first engine, sales growth. The sales growth is essential in order to grow a company's valuation 100-fold.
Great.
If the growing sales also finds its way down to the bottom line and increases.
I didn't buy Fubo when I learned about it. I think it was because I don't think it's an American company. So I wasn't really sure how to feel about that. And there was other opportunities for me. But like, look at Fubo's financials. This was another reason why. Revenues were amazing. And Fubo still has a shit ton of growth. Guys, it's not even $1 billion company. This is a small cap company. So there's still a lot of opportunity here. And the revenues continue to climb. My problem with it is it's not profitable. And I don't know how they plan on making it profitable. They don't have any free cash flow. The revenues continue to grow. But the price for the longest time was growing. And I think I was looking at it around this time right here where it was too expensive. But now it's a buying opportunity. I wouldn't buy it now because it's not profitable, but it's on my watch list 100%. And honestly, you might want to put $1,000 in here. If you have an extra $1,000 to put in here, put $1,000 in here, set it, forget it. In 5 years, that 1,000 might turn into 100,000. You don't have to go to crypto to get that type of growth. Because the moment that this free cash flow turns into, like, they're doing 1.6 billion, let's say it grows to 10 billion, and that free cash flow turns into 500 million. This is no longer going to be a $922 million company. This is going to be a $20 billion company type of thing, right? You guys can see earnings per share is still negative. They're growing, they're raising more capital. We have to see what exactly their plans are. And the reason why you don't want to buy too early either is because that capital can go into something else that's making you money. So like right now, they're spending most of their money on marketing and research and development. If I let's look at their quarterly earnings. Quarterly, they're growing as well. And there's a pattern here. So there's a specific type of way every year that they make money, okay? So that's a good sign. Free cash flow, Q1 of 2025, they actually had a profitable free cash flow. What a great sign. Now, let's look at their debt. It might, look, even their net income. They actually had a positive one. It might be turning. Now, they got crazy debt, But let's see what their free cash flow was last quarter. Okay, that doesn't seem right. No, that seems right. They can pay off their debt right now if they wanted to. So I'm not mad at their debt. It might be a good time to buy. And I might just buy some football. I'm gonna put it on my watch list. But it might be time to re-enter. All right, let's continue watching
Increases
this.
the net earnings, that is extra beneficial, as it will most likely increase the valuation multiples quicker. That is not a necessity though. Just take Amazon as an example. It has had a tremendous sales growth, but the actual earnings, well, they have lagged behind. What you should be looking for are companies with a disruptive product, service or business model, where the company is reinvesting the earnings in the business to become even more competitive in the long term. So, first engine, sales growth. The second engine is the multiple growth, or multiple expansion. Given that the multiples of the company aren't too expensive from the beginning, high growth is usually rewarded with higher valuation multiples. This is the twin engines at work. Let's consider the arithmetic. As an example, we'll use a company that currently has a price to earnings multiple of 15 and sales of about $200 million. If it can increase its sales by 100%, the stock price will increase by 100% as well, given that the multiples and the profit margin remains the same. 200%, and the price will increase by 200%. But what if we split that, so that the company grows 100% in sales and 100% in valuation? When the two engines are working together, they strengthen each other, and the end result is not just a 200% increase, but a 300% increase in the stock. On the opposite side of the spectrum are stocks with very high valuations.
Welcome back to Food.
For those, one of the engines will work against you, and the company will need to achieve very high growth rates in sales to compensate for it. So, search for companies that grow at a high pace, but try not to pay too much for them, so that you can enjoy the twin engines. Takeaway number 3. Owner-operators. According to Christopher Meyer, ultimately, it's the management alone which is the 100x alchemist. And it is to those who have mastered the art of evaluating the alchemist that the stock market rewards with gold. This means that, when it comes to investing, you should make sure that the operators of the company, that is, the board of directors, the CEO, and so forth, have the right incentives for making the best decisions from the perspective of shareholders.
I always tell y'all that.
If these operators own large parts of the company, they'll lose money if the company performs poorly, and gain money if the company performs well. This type of situation is what you must look for as an investor. Let's take Jeff Bezos as an example. He started Amazon when he was 30. He's now 55, continues to run Amazon, and still owns about 12% of the company. You can be sure that he won't make some short-term decisions in order to reach some quarterly sales quota. He will, to the best of his abilities, make long-term decisions that, by extension, also will be the best for long-term shareholders. If the plane, that is Amazon, crashes, the pilot, that is Jeff Bezos, will crash with it, just as it ought to be. For more on how to find great managers, please see my summary of The Essays of Warren Buffett.
Oh, might have to check that one out, y'all.
Takeaway number 4. The coffee can portfolio. The coffee can portfolio is a method dating back to when people hid their most valuable possessions in a coffee can and put it under the mattress. The method on how to invest in 100-baggers is basically the same. Pick the best stocks you can find and then put them in the coffee can. The average 100-bagger required 26 years of holding before reaching its 100x status. Did I hear someone say passive income? Christopher Meyer makes the similarity between an investor and a fish. A fish only eats a bait that moves, and if the bait doesn't move, well, the fish doesn't care about it. Same thing often goes with investors. Stocks that don't move are often sold due to lack of action, even though the fundamentals of the company moves steadily in the right direction. Also, stocks that underperform for a short period of time are often sold. Again, even if the underlying business moves in the right direction. Take Monster Beverages as an example. On quite a few occasions, the stock has lost 20% or more in value within a month, and on one occasion as much as 40%. There were many situations in which it was probably tempting to sell the stock, but gee, would that have been a mistake, as it became a 100-bagger in just 10 years. The best investors often say that the greatest enemy to superior returns are ourselves and our human traits, greed, fear, etc. However, different time periods of an investment's lifetime are affected differently by these damaging traits. You are often most rational when you don't own the stock. The coffee can portfolio uses this as an advantage. After your due diligence is done and you have made a purchase, just put the stock in the coffee can and leave it be. This is a way to protect you from yourself. You can view this as a boredom arbitrage. As Warren Buffett puts it, the stock market is a device for transferring money from the impatient to the patient. So, buy right, then sit tight. This is how to make money in 100-baggers. Takeaway number 5. Ignore the macro analyst. When you have invested in a potential 100-bagger or are looking for new opportunities, you should ignore whatever the Fed is doing, who's the president at the moment, and what's currently going on in China. Put blindfolders on and focus your strategy on analyzing and finding 100-baggers. Because these jewels, they continue their journeys even during recessions. The management of these companies seldom care about the current interest rates or Trump's latest tweet. They only care about the great products and services that they sell, and so should you. As quarterly earnings are presented also during times of recession, companies that make headway and can show high demand of their product are rewarded by the stock market, even though it might be the autumn of the year 2008. When you have spent time and effort and analyzing the stocks with great future potential, you don't want to miss out of the gains because a macro analyst might suggest so. Let's take a quick example from the financial crisis. The retail company Dollar Tree, which just so happens to be a 100-bagger, grew its revenues from $3.9 billion in 2007 to $4.2 billion in 2008. That's a 7% increase, even in a recession. The stock was rewarded by increasing from about $7.5 per share to $14 per share during that time, almost a 100% increase, while the S&P 500 during the same period lost about 40% of its value. This merely works as an example of why it may be stupid to care about the macro hassle when you have successfully found a company that should be put in your coffee can portfolio. Timing the market is hard. Finding 100-baggers is no easy task either. Don't try to do the combination. So, blindfolders on. Ignore President Trump and Xi Jinping and focus on the task at hand, finding those jewels. That's it on how to invest in stocks that return 100 to 1. Let's have a recap before you enter the stock market jungle for your hunt. Focus on companies that still have a long road to travel, but make sure that they are currently on the right path. Look for companies that can continue their growth for years to come, and where there is still room for higher valuation of multiples, the twin engines. Only board the plane if the operators are on board too. Avoid emotional errors by putting your stocks in the coffee can. Turn off the news. Stop checking the total value of your portfolio every day. Smash that like button and focus on finding the future 100-baggers, no matter the market sentiment. Big thanks to my friend Richard Dykes for helping me in making this video. Bye for now.
That was good. Yeah, when you're looking at buying good companies, what's going on in the world doesn't matter as much long term because it's a great company, right? This is why that a great company is the best hedge for a bad economy, is what they say. So that was dope. I did want to look at Fubo TV a little bit more. What do y'all think about it? Do y'all like the product? The financials look good. I haven't seen anything recent from the CEO, but I'm wondering, what people think about it. So I wanted to watch something recent on how people feel about the stock. So this might be a nothing burger, but let me check it out because Fubo has piqued my interest.
Man, this is bad. Quite bad. You won't believe what happened to Fubo TV. They not only reported the results for the last quarter, and if you read the press release, you see that the revenue was lower than what the analysts expected, what the market expected. Okay, this is acceptable. You can get over it. But then, if you read further, you see segment by segment what they reported. North America total revenue was up 3.5%. This is good. But then, the most important indicator about Fubo is paid subscribers, the number of paid subscribers, which was 1.47 million, down 2.7% year over year. And this is quite bad. When you see something like this, you have to wonder if the business model of Fubo TV is still sustainable. Then, they also reported the revenue and number of subscribers for the rest of the world. Revenue down 0.4%, okay. But again, the number of paid subscribers down 10.9% year over year. And this is not what you want to see with Fubo TV, with the streaming platform. Moreover, this is not all. They also provided some guidance. And when you read this guidance, you better close your eyes. Don't read it. Because for the next quarter, second quarter 2025, the revenue is expected to be about 340 million, 350 million. A decline of 10% year over year.
Damn, boy.
Okay. This is not that bad. But, as I said, the most important indicator is the number of paid subscribers. And if you look at it, they expect a decline of 14% year over year. The number of paid subscribers to drop to 1.2 million from 1.47 million. So they expect the number of paid subscribers, North America, the highest revenue for them, to drop by 14%. And this is bad, quite bad. And for the rest of the world, they expect another decline in their revenue, around 15% year over year. And another big surprise, the number of paid subscribers to drop by 17%. So what the hell are you doing? With this company right now? You get in or out?
Yeah, it's not good.
Well, there is still hope for Fubo TV. If you watch my past videos, you know what I'm going to talk about. First, there are also some good news. They succeeded to improve their operations. Net income, an increase of 188 million. They reported a profit over 100 million. Earnings per share up. This is good. Compared to last year, they had a loss of 56 million. Net provided by operating activities was up 161 million. And this is good. And their free cash flow has improved. They still have a decline of 62.
From my understanding, a lot of their subscriptions, what they're blaming it on is they lost TV deals with Univision and the absence of certain one-time sport events. Because I remember Fubo used to be the source for specific one-time sporting events, and I don't see it advertised as much.
Million, minus 62 million, but an improvement of 9.3 million year over year. And they still have 327 million in cash. Compare this with the current market cap, 826 million. It's good, quite good. They have money to fund their operations. But what do you do with those declining paid subscribers? What do you do? Because this is the most important indicator. If their paid subscribers goes down, future revenue and profits go down. So what's the solution with this company? Get in or out? Well, there is still a hope for Fubo TV. And that is regarding their agreement between Fubo and Disney company. The CEO said that they remain excited about this agreement, this deal, and has potential to increase competition and consumer choice in the pay TV space. They continue to work through the regulatory process and look forward to sharing more information when they are able. Now, why this is important? Their deal with Walt Disney Company. Because if they combine their companies, Hulu plus Live TV plus Fubo, the number of subscribers will increase and also the content on that platform. The new platform will become much valuable to consumers and they are likely to stay with that platform, to have sticky paid subscribers and no longer.
Yeah, so for me already, like I've got all the information that I need. I went and I looked at the transcripts for their earnings, their last earnings calls on Qualtrim. I got all the information that I need. I'm not investing in something like this, not yet. At the very least, you know, I would have to actually be a fan of the product and use it and have that type of edge, but I don't, and I don't plan on using it. You know, if it was like a Tesla that I literally know the product inside and out, I might be more okay with investing, but I'm not willing to put in the money for this. You know, just thinking about the opportunity cost. Now, if you got money to burn and you want to put $1,000 in, and maybe in 3 to 5 years that $1,000 turns into 30,000, 50,000, it could happen. Especially if it goes from $2 to 30, like it did in the past. Did y'all see that? It went from $2 to, look at this. Imagine being on this wave right here, catching this wave. Look at this. I'll show you guys. Imagine catching this wave from $10 to $50. Insane. I mean, even recently, from $1.60, this was when the Disney thing was announced. You know, could it go from $3 back to 30? That's a 10x. Turn that 1,000 into 10. Look at what it, damn, $66 a share, man. Went from $10 in the IPO to $66. This is why you don't buy it during IPOs, bro. Holy smokes. Yeah, Fubo for me is a no-go. Fubo's a no-go. All right, let's see what's going on in the world. Actually, I want to see this. You guys remember when Trump and his administration said, we're going to release the Epstein files right away. We want the American people to have full transparency. And when they released some of these files, the Kennedy files, the Epstein files, it was kind of like very limited and nothing burgers. I don't know how much you guys like John Kennedy, but he be snapping on people. And so he is grilling Kash Patel right here about what the hell is in the Epstein files. So let's watch that.
Oh shit, no sound. Sorry guys, I'm not sure why that happened. What the heck? There you go. That's so weird.
Mr.
Sorry
Director,
guys.
worry not. We'll make sure your agency is adequately funded.
Thanks for the heads
This
up.
judge you arrested in Wisconsin, she was breaking federal law, wasn't she?
Yes, that's why we arrested her.
She was helping an illegal immigrant escape being taken into custody. Is that right?
Yes, and the field agents decided to open the case, work the case.
And as Americans, do we get to pick and choose which laws we want to follow?
We do not.
If you're a state court judge, do you get to decide you don't want to follow federal law?
No.
And if you violate federal law, you get arrested, don't you?
Yes, Senator.
That's called equal treatment under the law, isn't it?
Yes, Senator.
You remember Lisa Page and Peter Strzok, don't you?
Yes, Senator.
Mr. Strzok worked for the FBI. Mr. Strzok worked for the FBI. I think Ms. Page worked for Justice. The Inspector General found in its investigation that they hated President Trump and they really wanted Secretary Clinton to win. Is that true?
That's correct, sir.
And this would be the same same Ms. Page who sent an email to Mr. Strzok with whom she was having an affair.
Damn.
Trump's not ever going to become president, right? Right? And Mr. Strzok with the FBI, senior official at the FBI replied, quote, no, he won't. We'll stop it. Did I read that correctly?
You did, Senator.
Okay. Now, Ms. Page got quit before she could get fired. Mr. Strzok was fired. And predictably, they filed a lawsuit because in Washington, it's easier to divorce your spouse than it is to fire a federal employee.
Damn, boy.
Why did the FBI give Mr. Strzok $1.2 million and Ms. Page $800,000 to settle a lawsuit?
Senator, I do not know that settlement was reached in the prior administration.
Who made the decision?
The prior Department of Justice.
Who in the prior Department of Justice?
The settlement for that kind of case can only come from the Attorney General, which would be Attorney General Merrick Garland.
So the Attorney General decided to give Mr. Strzok $1.2 million and Ms. Page $800,000 after they were fired after actively interfering in the 2016 election. Is that right?
My understanding is that was a settlement they agreed to.
Pass me the sick bucket, please. The Hunter Biden laptop. In October of 2016, shortly before the election, the New York Post wrote a story that was widely covered talking about Mr. Hunter Biden's influence peddling scheme based on his laptop. A couple of weeks later, Secretary of State, soon to be Secretary of State, Antony Blinken, organized a group of 51 so-called intelligence experts. Had some real rock stars on the list. Jim Clapper, John Brennan, Michael Hayden, Leon Panetta, and they said, oh, no, the story in the New York Post is not true. It's based on Russian disinformation. You remember that?
I do, Senator, as the lead investigator for Russiagate for the House Intel Committee.
Yeah. The FBI had the laptop for 10 months, hadn't they?
They did, Senator.
So the FBI knew right before the election that it wasn't Russian disinformation, didn't they?
And that was confirmed by the Inspector General's report.
Yeah. Who at the FBI refused to let the FBI tell the American people the truth?
I don't have that name in front of me, sir.
Well, would you look?
I will, sir.
I'd like to know. I'd like a name, not a division. I'd like the name. Person with a brain and a beating heart.
Yes, sir.
Did Jeffrey Epstein hang himself or did somebody kill him?
Senator, I believe he hung himself in a cell in the Metropolitan Detention Center.
Are you going to release all the information about that?
Senator, we are working through that right now with the Department of Justice.
When do you think you'll have it done, Cash?
I think in the near future, sir.
Like before I die?
Senator, we've been working on that, and we're doing it in a way that protects victims and also doesn't put out into the ether information that is irrelevant for production of the public, such as CSAM.
Thank you, Mr. Chairman.
So interesting, bro. So Kash Patel, he was appointed, I think, by Trump's administration, right? And you would think he's probably going to be more honest than the last administration about this. And he's saying it's a suicide. It was a suicide. He doesn't see the evidence to show that he was killed, which is crazy. But part of it is because wasn't evidence deleted? There was no footage of that particular time. Let me fact check myself. Because he was on suicide watch. From my understanding, he was on suicide watch. Yes, surveillance footage from outside Jeffrey Epstein's cell during his first apparent suicide attempt in July 2019 was permanently deleted due to a series of administrative errors. Initially, prosecutors believed the footage had been preserved. However, it was later revealed that the staff at the MCC, or the Metropolitan Correctional Center, inadvertently saved video from the wrong tier of jail. This mistake occurred because the prison's computer system listed Epstein's cell incorrectly, leading officials to preserve footage from a different location. Further complicating matters, the backup system that stores all video from the special housing unit where Epstein was held also failed. The FBI found that the backup footage had been erased due to technical errors, rendering the relevant surveillance video permanently unavailable. How does that happen with something so important like this? How does it happen? And then on top of that, there were staffing failures. 2 guards assigned to monitor Epstein failed to perform required checks, and later they falsified records to cover up their negligence. And then on top of that, 2 cameras outside of Epstein's cell malfunctioned on the night of his death. And another camera's footage was deemed unusable. How does all of this happen at once? But hey, Kash Patel, who was appointed by Trump, says it was a suicide. Biden and his administration, they say it was a suicide. It almost makes you think Epstein had his hands on everything. And probably there were people on every side of regardless if you're a Democrat or you're a Republican, he was probably involved with everybody in some way, shape, or form. And so this might be a class thing and not necessarily a politics thing. Because it's insane how this could happen on what's at that time the most important case in the country at that time. I don't know. Y'all let me know in the comments what you think, man. What y'all think, chat? It's crazy to me.
All right, so we decided Fubo is a no-go. TikTok has been a thorn in my side because I'm older, and I went through the MySpace, Facebook, Vine, Instagram, all these journeys, and TikTok I still haven't really locked in with. I use it every now and then, but I haven't locked in as a creator or a brand. Tomb 45 is kind of on there, but it hasn't synced well with our Shopify. So we're trying to figure out how we can get that to work better with our inventory system. Nonetheless, I want to watch a video on how this lady turned her beauty business into $1 million company using TikTok, because I don't know shit about it. I don't know shit about TikTok. And it might be a sales channel that I really need to pay attention to. Even though I can't really do anything about it yet until our systems are fixed. Because what happens is we had TikTok connected, and when an order would come in, for some reason it wasn't mapping the information with our third-party software that tracks inventory. And that's necessary when you grow to a certain level. You have to have third-party systems to track, inventory, how much you have, when you're going to run out of inventory, and to track, distributor orders, all of that stuff. So once that system is mapped and it's working well, then I can really push the TikTok platform, because I know you can set up like affiliate programs and get influencers creating content and collecting a commission. So I want to be involved in that. I just got to learn it. So let me watch this video with you guys. It's only 5 minutes long. Maybe it might inspire me to really put my foot on the gas here with Tomb 45 and our TikTok.
It feels fated. All of this was just supposed to happen.
The world of work is changing. There are now more ways than ever to make a living, mostly thanks to the internet. In New Money, we take a look inside these new, lucrative digital industries.
We're predicted to end.
Day trading's another job, bro. I hate that. I hate the concept of another job. I don't need it.
The year with a 6.5 million turnover, and then hopefully by next year, we're going to be around the 8 million mark.
In this episode, I visit the HQ of viral beauty brand Hair Syrup. Lucy posted a video of her homemade hair oil on social media, and a few years later, the 25-year-old heads up a multi-million-pound company. I visited their offices in rural Wales to find out how she did it.
I gotta send this to my wife.
So this is our kind of multi-functioning warehouse.
Lucy runs her company from this warehouse in Pembrokeshire. It's where the bottles get filled, labels get added, and stock gets sent to clients, and where they run their TikTok lives selling products.
So this is how it arrives in these drums, and then they get decanted into the manual filling machines, and then eventually into bottles and onto the shelves.
How much different is this process from when you started the business?
Worlds apart. So I used to have all of the individual components, individual ingredients, and then I'd have to put them all, measure them all out, put them in a bowl, mix them together, and then put that into a jug, and then hand fill the bottles using a jug. And it was quite messy. I used to spill it, get it everywhere. So you have to be quite innovative when you're starting a business completely from scratch with no help and no funding. You have to be resourceful. This one, which is one of my favourite products.
It all started when Lucy was at university. She posted a video to TikTok sharing her homemade hair oil. That video went viral, getting more than 600,000 views. Lucy says she was getting messages from people asking if it was for sale. It wasn't, but she thought, why not?
For the first year, I think we did around the 100k mark. I can't exactly remember. And then 2022 to 2023, we'd surpassed $1 million in turnover. So we had something like a 967% increase in revenue. We're predicted to end the year with a 6.5 million turnover, and then hopefully by next year we're going to be around the 8 million mark.
They now sell online, on TikTok Shop, and in store at shops like Boots.
I'm going to take you around the warehouse.
But social media is still arguably the vital part of the business.
With my brand, you can't get away from social media because that's where it was born from, that's what started it.
Lucy's warehouse is in a really rural part of the world, and certainly not somewhere you'd expect a viral TikTok beauty brand to be based. She says this gives them a good USP, and it's brought jobs to the area, but it also has its problems.
I actually kept it a secret for about a year and a half because I was so conscious that this was very different to what everyone else does around here, and I didn't know how people would react to it. I thought people would probably laugh at me, and they did, and they still do, but now it's really nice because we've definitely become a lot more accepted now.
You said people would laugh at you when you first started here. Why would they do that?
It's just a small place, small town, people talk, people gossip, and yeah, that's just kind of how it is. It's the biggest thing really that's come to Pembrokeshire. I think there's a lot of, why is that happening here? That doesn't happen here. That happens in places like London, but actually I'm trying to spin this narrative of like, but guys, look, we live in a digital world. We no longer have to feel like
that's what I'm saying,
20
man.
years behind everyone.
I've been saying this for years. Look, people don't care about your race or your sex or your religion or what you look like. When you have a product online, they see the product, they see the content, they buy, it gets shipped to them. You can live anywhere and do this. You could live in the damn mountains and do this. It's possible. You want to know why I know it's possible? Let me show you guys something. Her story is very similar to mine. I started making my shave gel in my kitchen. And I was shipping pallets from my garage. This was the chemicals. These buckets back here was the chemicals. And we were making, me and my partners were making the shave gel in the house, in the backyard, in the kitchen. Now, this is our warehouse, and we ship pallets every week like this to distributors all over the world. Let me show you. I think I got clips of me actually making shave gel with my partners. Today we have over 60 SKUs. We have patented products. We have a clipper and a trimmer that we launched with Conair as a partnership. It's a multi seven-figure company. But let me show you. The same way that she showed you guys how she was making her labels and stuff like that, we started even lower than that. Even lower than that. Take a look at this clip. That's us making the shave gel. So this is what, our fourth batch, guys? 1845. All night, making shave gel, all night. Hand pumping it, the beginning. Mixing it in this drum. Look at this. Look at this. With a hand drill.
Will you look at that there?
And there's the shave gel. It's possible. But it's a lot of work. It's a risk. It might not take off right away. You're not going to make any money for years. Even if you are making $100,000, she didn't get to pay bills with that. She didn't get to go on vacation with that $100,000. She had to put it back into the business to continue to grow the inventory. So you won't actually make money for a while. I think my company made its first $1 million 4 years after it was launched. And today we have been in business for 9 years, and we have grown by 100% every year since then. It's amazing. It's a lot of work. It's hard. It's not easy. Most people will fail, but it's worth it. It's still worth a try.
Everywhere else.
The beauty industry on social media is huge. 52% of people on TikTok.
If this is what you want to do, because it's real work. It ain't for everybody. And there's nothing wrong with having an amazing job, making great money, and investing your money, and having real estate, having stocks, having a portfolio, and having a great paying job and a life. There's nothing wrong with that either, guys.
On TikTok, so they use the app to find beauty products, spotting a gap in the market and scaling up from there with greater access through personal social media content. Lucy's story is the story of hair syrup. It's hard to separate them. And that same platform has allowed her to run this company from wherever she wants.
I'm trying to spread the message, especially to people younger than me. You can actually do these things for yourself. You don't necessarily, and people go, oh, I want to stay in Pembrokeshire because this is where my family is, but I want to get a good job. I want to do something that I'm interested in. You know, maybe I want to work in fashion, or maybe I want to do this. Oh, I'm going to have to move to London. I'm going to have to move to Manchester. So I'm just trying to change the narrative around that.
That was cool. That was cool. I didn't really learn much about, TikTok and stuff, but maybe this is the better video to watch. Hey, shout out to God for putting this as the next one. That was inspirational, and I get it. I used YouTube and Instagram to grow my brand, and paid ads, so Meta ads, Google ads, but TikTok is the new wave, right? So let me check this out.
TikTok. Every day, 50 million Americans log onto the video sharing app, scrolling, dancing, streaming, watching.
We've tried other platforms. We've seen success with other platforms, but we've never seen anything like TikTok Shop.
And of course, shopping.
TikTok Shops, that was the real game changer.
Launching in the US in September 2023, TikTok Shop joined a crowded landscape, with social shopping apps fighting for attention, clicks, engagement, and sales.
Before TikTok Shop, that path between discovery and purchase was actually not fully connected.
Social commerce isn't new. TikTok joined the likes of Instagram, Facebook, Pinterest, and even the ill-fated Amazon Inspire in attempting to create an attractive social media shopping experience. What sets TikTok Shop apart is this. In just 1 year, TikTok is converting more users to shoppers than any of its legacy competitors, a number the app is expected to expand on in the coming years.
We're only scratching the surface here with TikTok.
In 2024 alone, TikTok Shop had 47 million shoppers use its marketplace, with an average of $32 million being spent in the app every day. Money that isn't just going to big brands, but small businesses, entrepreneurs, and creators who depend on TikTok Shop to maintain their business.
I opened, which is now Boss Cosmetics, when I was 14 years old. And I started that in my grandma's kitchen table. And it kind of grew to where it is today.
A revenue stream that is in danger of disappearing just as quickly as it arrived.
The clock is ticking on TikTok.
The president also signed an executive order delaying the enforcement of the app's ban for 75 days.
They think it's just another silly app. And it's really not. It's changed my business. It's changed my life.
So how did ByteDance own TikTok go from a video sharing app to a dominant social shopping marketplace in just over a year? And what does an uncertain future mean for the app, its users, and business owners?
All right, this is what I want to learn.
In 2024, TikTok Shop added an estimated 11.9 million US buyers, almost double the buyer growth for both Instagram and Facebook combined.
All these companies should be real nervous because TikTok Shop starts from this huge strength of customer attention, very sticky customer attention.
We attribute our rapid growth and our rapid popularity to the way we have transformed discovery e-commerce into an efficient flywheel.
TikTok Shop itself is a marketplace, similar to Temu and Amazon. The marketplace hosts products for sellers. This means you encounter a wide array of product, from vintage clothing resellers and mom-and-pop businesses to drop-shipped Chinese goods, and even major brands. Brands like Elf Beauty, PacSun, Benefit Cosmetics, and Crocs, all looking to leverage TikTok's algorithm to get eyeballs on their product.
Amazon, Temu, and Shein are all great at selling stuff. And they're not necessarily awesome at getting the customer's attention. And so they're commerce players that are trying to learn how to get attention. Whereas ByteDance and TikTok specifically are the world champions at getting customer attention.
When you're a new business in the US today, TikTok Shop is where you start your business and you find your audience. So this is really the core of what we're doing.
What sets TikTok Shop apart from other social commerce apps is how it integrates shopping into the social media experience. Using its existing social algorithm, TikTok creates a closed-loop shopping experience. Experts coin shoppertainment.
It's the ultimate in word of mouth and trusted selling, right? You follow someone, you trust them, and the products that they're providing. And especially in live stream, you get to see it in action, so it's not static.
If you've been on TikTok recently, you've probably seen these. These are shoppable links. TikTok affiliates use them to connect products directly to their videos, getting a cut of the sales made through their link, allowing creators to monetize TikTok Shop even if they themselves aren't a seller.
I am currently generating about $500 to $1,000 a day with TikTok Shop as an affiliate, not a seller.
This also keeps potential buyers in the app ecosystem instead of linking out to an external website.
TikTok added more amenities to link out to an e-commerce site and buy those products, or even they created ad formats where you could buy products in TikTok. So the commerce experience evolved on TikTok.
It's this creator-driven marketing that has become the linchpin in TikTok's strategy and spawned entire careers for affiliates like Lexi Rosenstein.
I was the kid that would stay up at night watching beauty YouTube videos, and I feel like because I watched that so much, it kind of conditioned me to be able to make content.
I was the guy making men's haircuts videos, grooming videos on YouTube. And I never made it over to TikTok. I need to, apparently. Or I need to find people who are already in TikTok and support them. What do y'all think? Any TikTokers on here? Any barber TikTokers need some support?
Content like this. It's not brown, it's not red, it's just the perfect statement lip. I kind of got in early, but you essentially create your content and then you get to scroll through the TikTok Shop marketplace, see if the products that you like are in there, and you can tag them to the video or the live stream. It's not like you have to scroll on TikTok, oh my gosh, someone told me about this product, now I have to go to Google and find it there. It's just, oh, it's right here, I could buy it right here in app.
But the biggest weapon in TikTok's arsenal is its algorithm. E-commerce apps like Amazon use algorithms to make assumptions about purchasing habits. You bought a pair of rock climbing shoes, here's a suggested purchase of more rock climbing gear based on other users' purchases. It works for Amazon's purposes because you're likely already planning to spend money when you open the app.
When you go to an Amazon or in a marketplace, if the algorithms and the data hyper personalizes the experience, as soon as you log on, this is what you bought last time, this is what's on your shopping list, people who bought this, who bought that algorithm drives 34% of their sales.
TikTok, on the other hand, treats advertising as content, utilizing its existing social algorithm to make decisions about what you might be interested in, based on your content viewing habits instead of your past buying habits.
Our systems actually suggest content based on preferences from the users and their interactions on our platform.
It's your viewing history, it's your purchase history, and it's the amplification within your network that's driving that personalization.
An estimated 43% of TikTok users made at least one purchase on the platform in 2024, and 71% of those shoppers say they start shopping in-app when they come across a product in their feed.
Every time you look at something, every time you pause on something, every time you click or swipe on something, that's cutting code in the background on this algorithm and making it smarter.
On the other side of the equation are the 7 million US businesses hosted on TikTok. This is Aaliyah Arnold. She's the founder of Boss Up Cosmetics, where she makes and sells her own makeup line.
So I got on TikTok Shop a little less than a year ago, which is so crazy. It kind of just blew up and kind of expanded more, and it allowed me to reach a lot more audiences and just to know my niche and know what the people wanted to see from me. We have seen an increase 500% month over month, and we have done 6 figures consistently every single month.
You are a business in and of yourself, and that's what's so powerful about this channel.
Nearly 40% of small business owners on TikTok say the platform is critical for the success of their small business.
They're growing this seller base by more than 100,000 new sellers per month. Right now, we put it at 2.8 million active sellers.
And those sellers aren't just selling products on TikTok Shop, they're marketing themselves in-app as well.
TikTok is a marketplace for sellers, but it's also a marketplace for creators. So e-commerce creators that actually find product they love on the platform can actually post content about it and earn commissions. It democratizes e-commerce.
This is what marketing is, showing people my process, showing people my behind the scenes. They want to see me make lip gloss. They want to see my mistakes. They want to see my family working.
People don't realize that you can have 5,000 followers and monetize your content on TikTok and TikTok Shop.
And it's in this marketing ecosystem that business owners like Arnold and TikTok affiliates like Rosenstein work in tandem.
I do have direct relationships with the brands that I work with. So
that's what I might end up doing. Just run my TikTok page showing the business. And showing the business, learn that shit, just like she's saying, because it is a family business that I own. I have a warehouse in Tampa. There's a lot of exposure that I can share with how we're doing our products and stuff. I love that concept. my wife just launched her own product, Just Be Curly Gel. It's a hair gel for curly hair, and she's been promoting it. People have been loving it. So, you know, I definitely want her to see this. I'm gonna share this with her.
I understand when they say, hey, here's our marketing goal and stuff like that, but I also understand as the consumer of this content what people like to see.
Whenever they make a video of my product or any product on TikTok Shop, they can easily just tag it and they can also gain commission from that video. And it got to the point where I paid someone over $70,000 just in affiliate marketing, but like obviously the sales are backing that up. Their video blew up like crazy. I think they got over like 8 million views. So obviously out of that 8 million views, so many people were going to purchase from that video.
This is especially true in the health and beauty space, an area where TikTok Shop has seen the most growth. 80% of products bought on TikTok Shop are health and beauty products, totaling $1.34 billion in sales in 2024, or $63 per buyer. TikTok Shop is already the 8th largest health and beauty e-commerce retailer in the US.
We're definitely seeing a rise on clean beauty, skincare forward beauty. I think that people are a little bit more conscious about what's in their products nowadays.
This one has been sold out. I'm dying to get my hands on it. It just came back in stocks. If you want to get it, girl, run. I linked it below for you.
As money continues to pour in for businesses, there's one huge, massive, federal-sized catch. Another impending deadline for the app to sell or be shut down in the US.
It is a very scary situation because, like I said, my whole family works for me. So this is our livelihood. We depend so much on our brand and on TikTok Shop to bring in orders so we can continue working every single day.
In April 2024, Congress passed a law requiring ByteDance to divest from the app and sell to a US-based company. The concerns and allegations are that TikTok is a national security threat due to its ties to China. Accusations TikTok denies. The app briefly went down for a few hours on the initial deadline, January 19th, 2025, but was given a 75-day extension by President Trump, meaning TikTok has until April 5th to find a US buyer. Now, Vice President J.D. Vance did say he expects a deal for TikTok to be done by April 5th, but as of the making of this video, no deal has been announced.
We are focused on developing the business and finding a solution to be compliant with the executive order.
The United States is TikTok's largest user base, with
I'll be there.
136 million monthly active users. Americans spent more than 4.8 billion minutes on the app in 2024.
Whatever happens, we're just going to adapt. Just like we have done the past 6 years, we're going to continue doing it for the rest of the business. Just adapt, adapt, adapt.
Okay,
and just
girl.
honestly keep our fingers crossed.
I feel like no other platform is as enjoyable for me as a creator because of the vibe that TikTok has. It's so authentic. People love to engage with you. The same exact piece of content that I take from my TikTok and I post on other platforms, I get a completely different reaction and a different audience there.
Another potential speed bump for TikTok Shop long term is one that comes with the bargain marketplace territory: product quality concerns.
I don't think so. And no. I am upset. I am upset.
That's gonna happen everywhere.
This looks nothing like the photo. Do not order this. Goodbye.
If you see these crystal cups on TikTok Shop, definitely don't buy them. They're not crystal, and it's really not a cup.
One study found that 35% of consumers said influencers or celebrity endorsements online convinced them to buy a health or wellness product. But that same survey also found that when it comes to buying on social media, 55% of respondents said they didn't think a product or service they bought because of TikTok was worth it. Vetting sellers is an area TikTok says it's working to crack down on.
Ensuring high-quality products and high-quality merchandise on the marketplace is of paramount importance. We're leveraging a combination of policies, technology, as well as human resources to actually vet the products individually.
If you could go to sleep at night telling someone to spend their hard-earned money on something that you can't stand behind, then you should not be in this field.
So in the case that TikTok does stick around and users can keep shopping, dancing, lip-singing, where does TikTok Shop go from here? Well, according to TikTok, it is seeing growth potential in live shopping, an arena that's exploded in Asia with a global valuation of $980 million in 2024 and is expected to surpass $5.4 billion in valuation by 2032.
Definitely live streaming has grown my page significantly. Again, I started TikTok Shop September of 2023. I had about 1,000 followers. Now I'm at almost 70,000, and that's really, I think, because of the lives.
We believe live shopping is going to be very big. We had obviously a very successful Black Friday, Cyber Monday during the last Q4. We had about 700,000 hours of live shopping during this weekend. So it's actually getting a lot.
That's crazy.
There are unbelievable amounts of people making over $1 million a month already on TikTok live shopping.
Not only has TikTok and TikTok Shop changed my life, but I would say specifically live streaming.
Specifically live streaming. Yeah, that's gonna be tough for me. That's gonna be tough for me to live stream. But my wife's brand could definitely do that. So I'm just sharing links with her. If it happens, it happens. If it don't, it don't. It is what it is. Guys, I will be right back. I got to go on a bathroom break. Be right back. All right, my bad for the delays. There we go. My bad for the delays, guys. I am back. What did I miss? Any breaking news? Anything? Any questions? Let me see. Loving the content. Yes, I will be at CT. I think I already answered that question. All right. This is what I do want to see because I'm a fan of Palantir. Palantir is one of those companies that can become the next NVIDIA, that can become the next Tesla. And I've been selling puts on Palantir. Honestly, I'm hoping I get assigned those shares. And so I'm gonna watch this because I want to learn more about Palantir's internal team and what they're talking about, because I want to get serious about, no, I didn't see the new Pope. All right, let's I'm gonna put this Palantir one on the dock to watch after we check out who the new Pope is. Trump announces a new air traffic control system. There's so much going on. There's so much going on. Colombia protest. Did they actually show the new Pope? Let me see. Alec, do the podcast next week? Maybe, man. Oh yeah, they do. They did. Damn. Let's watch this. This is crazy.
After that, Leo XIII and that ringing declaration in his encyclical of the essential dignity of work and of every worker, their right to form unions, the responsibilities of management, that indicates an attitude very common in Chicago, which is a big union city, and an attitude towards workers around the world who have, over the past several decades, really been shortchanged as the globalization of the economies of the world has taken place, and the financialization of the world has essentially concentrated so much wealth. That may be part of his agenda. We may be seeing something there. But there's one other issue from Chicago that I'm curious about to hear from our new Pope, which is, does he prefer deep dish pizza or Roman pizza, which is very, very different?
I would say he might have to say he prefers the pizza right here in Rome, Terry, depending on who's within earshot of him. That's a dangerous question. I'll let you ask that of the new Pope if you get the chance. But Terry, something you said struck me, that he was a Cubs fan from the south side of Chicago, and yet you hear him at the Vatican described for his quiet, humble way. That's perhaps how he survived being a Cubs fan from the south side.
That's a great point, David. And another thing that you know, because he's a Cubs fan, is he is well acquainted with suffering in the sporting world. The Cubs didn't win a World Series for
So apparently, this is the first time an American has ascended to the papacy. So this is the first American Pope. Wow.
Terry Moran, who has covered the Catholic Church for so long and
he was born in Chicago.
A native son from Chicago and knows what this moment is like for the Windy City. Terry, thank you.
69
I want to
years
go down
old.
to St. Peter's Square. Our chief foreign correspondent, James Longman.
There was 133 cardinal electors that participated.
History we all witnessed unfold here on the balcony at St. Peter's. And James, what's the reaction been down there?
Well, just shock, I think, David. I mean, it's absolutely extraordinary. I mean, just
shock.
Amazing. This 2,000-year-old institution can still surprise us. And boy, did they surprise us. I mean, it's just, did you hear that? I mean, people are going absolutely wild here. People did not expect this. And it's a challenge. Maybe this is a challenge to the world to say, look, the United States, normally associated with secularism.
Yeah, I've been following EYL since back in the day.
Maybe they feel, these cardinals, that, the church in Africa, the church in Asia, maybe it's okay. Maybe the church is growing in those places. And maybe this is the challenge to the West to take up the faith. They need a communicator. They need someone to go out into the world. That was what we heard very strongly from the bulletin from the cardinals at that last congregation when they said they wanted a pontifex, a bridge builder. And we heard it in the words that he spoke on that balcony. And maybe on some level, David, there's a feeling that the United States is retreating from the world, from leadership in the world. Perhaps, of course, at the moment, the United States is reforming the world, changing the world to a great degree, but maybe the leadership that the world needs now from this American is right here in Vatican City. That might have been what was going through the minds of these cardinals. We don't know, but down here
Trump
on
got
the
an
square,
American,
it is just a
and he
joyful,
gonna take credit.
joyful atmosphere. Got children on the shoulders of their parents. You can see there the American
He gonna take
flag.
credit.
This is.
Remember the picture I showed you guys that Trump had posted of him using AI looking like the Pope? Let me see if I can find it. I reacted to it. I was like, damn, this offended a lot of people. He gonna say, man, this is how we got an American Pope. Without a doubt, it's happened. It's gonna come.
He
Look,
does
this is
come
it right
from the
here.
United States, and he makes history in doing so. The Catholic Church had long.
Now we got an American Pope, thanks to Trump. I'm obviously kidding, yeah. I'm obviously kidding. But he might just actually
and how
say
he
it.
balances the other voices on the world stage.
What's
that
the
will
over
be
and
what
under?
we train our eyes on in the months and years to come. And Father Martin, it's not lost on you that the moment
Legendary investor
the
Paul Tudor
world
Jones issuing a
recognizes where he's
warning this
from,
week on
the diplomatic role he played here in the church, the outsized role that he played in choosing the bishops, helping Pope Francis to choose the bishops, that this is a man ready to lead, and how will he use his voice? That remains the question.
Well, I think that's a very good question. I see that a number of people have described him as reserved, which is true. He's a very modest, soft-spoken person, and I think, but with a great deal of authority. And how he uses his reserved voice on the world stage is important. One of the important things I think historically is that you're talking about the first American Pope. It's not just sort of a novelty for Americans, but it really marks the maturity of the U.S. Church. There was a controversy called Americanism, which people who have read church history know about, were just the whole idea of America and democracy and those kinds of things were really suspect by the Vatican. And so this is a kind of the sort of maturing of the church and a recognition that the American church is now fully part of the Catholic Church. It's really quite stunning.
And a test now of some of these competing
No, Alec, I'm
values,
using
moving
Ecamm.
forward. It's going to be fascinating to watch.
It's
unfold.
in school.
I want to
too.
go down
showed
to
my
the
whole
square.
setup.
Maggie Rulli, also in St. Peter's Square. And Maggie, I know that you were reporting in that you witnessed so many people who were deeply moved and emotional as he emerged on that balcony.
Right here, I show how to use my entire
Yeah,
setup
David,
here.
so many people overwhelmed by emotion come to tears. And I'm here with Jessica Wood from New York, and you were one of them. You were standing right.
So.
To realize it was even white. We had a tour through the Vatican today, which I thought was totally going to be canceled, and to my surprise it wasn't. And I was fully ready for the smoke to be black, and it took me a second for it to register, and I immediately just started crying.
Look, people are
it's
so happy.
so unbelievable that I'm here right now. I'm here for one day only, and I have the opportunity to be something that's part of world history.
You're here for history, not just a new pope, but the first pope from America. What does that mean for you?
It's definitely profound. First American pope ever, right? And it's no secret it's been a tumultuous time with all of our politics, and I'm hopeful that this is going to be something that's really positive for us as Americans.
Yeah.
Thank you so much.
I
It's
agree.
been incredible to be down here and feel this emotion, David. I think so many of
Brings
us are
the
just
world
overcome
together
right
a little
now.
bit more.
So interesting to hear her describe not only the fact that she was here just for one day, and it happened to be the day that the Catholic Church announced the new pope. That's good planning, whether it was meant or not. But that she also put words to the deep political divisions, not only back in the United States, but around the world. And she remains hopeful, that young American woman, hopeful that Pope Leo XIV can offer another voice and help bring people together. And that can only be the hope of all of us moving forward. I want to bring in Father John Walk, who's also with us for our coverage here today. Father Walk, you helped
This is
us
the new
get
Pope
to
right
that
here, guys.
balcony, down the Hall of
That's the new
Blessings, and
Pope.
describing
Pope
what it
Leo.
must be like in preparation to greet the world. And I had asked you beforehand whether or not the timing of these votes, of 4 ballots, we learned of a new Pope with the same amount of timing, essentially, that it took for Pope Benedict and then Pope Francis. And we learned today that they made history in choosing the first Pope from the United States. How surprising was that to you, and what do you make of the decision?
I thought it was absolutely astounding. It's a massive surprise, and it's a historical turning point, really, for the United States and for the church. I mean, to think you have a pope now who is, I think of it in certain terms as a linguistic event, and that we have a man who is equally at home in Spanish and in English. People who are near me here, when Leo XIV began speaking in Spanish from the balcony, started crying when they heard him speaking perfect Spanish. And what we're going to face now is something we've never faced before, which is Roman Catholicism, the papacy, speaking to us with an American accent. And that is a new phenomenon.
And Father Walk, you heard him actually reference Peru in his blessing before the square. Certainly he has origins back in the United States, born in Chicago, as we've mentioned, back in '55. He's relatively young, 69 years old. But to make a point of talking about Peru, the time he spent there, missionary work, and as you point out, the fluent Spanish that he spoke. In many ways, those are signals that in moving forward, he is going to continue outreach in the way Pope Francis did over the course of many years.
I think he made reference to bridge building, and he is going to be a bridge between Latin America and what I would call the international
So is he a
Anglosphere.
Latin American?
It's not just the United States. It's all of the
like a
English
Hispanic
speakers
American?
all over the world, which are in Africa and Asia.
Let's see.
Right? And they're going to hear the Pope in English, which is never a native English. And that's never happened before in the history of the church.
Wow. I'm going to start listening to these press
Surprising
conferences
us
with the
again
Pope.
this time after the conclave to replace Pope Francis, Pope Leo XIV. Our thanks to Father Walk. I want to bring in Liz Nagy from WLS, of course, our ABC station in Chicago. She's here in Rome with our team. And Liz, first of all, reaction on the streets here in Rome, and I'm sure you're already read in on the reaction back home in Chicago. What a day.
David, I can almost feel the vibration of Catholics in Chicago
Peruvian,
celebrating
French, and
this
Italian.
moment right now. People who live in Chicago must be extremely proud of Pope Leo XIV. That conversation that you and David just had, or you and Terry had just a few minutes ago about Pope Leo XIV being a Cubs fan on the south side of Chicago, whether or not he prefers Roman or deep dish pizza, those are the kinds of conversations that are surely happening.
So yeah, he was born in 1955 in Chicago. His mother's Hispanic. She's, I guess, Peruvian. And he became a naturalized Peruvian citizen in 2015. And his mother's name is Mildred Martinez, but his father, Luis Prevost, is French and Italian.
In the city of Chicago right now.
And he speaks
also
fluent
a very
Spanish.
diverse Catholic community, 2.1 million Catholics in the Chicago area,
Love that.
many of whom speak Spanish and English. That will be something that really means something to them. A pope coming out on the balcony, the first American pope addressing the world in Spanish. Now, Pope Leo has spent much of his career outside of the United States, but has frequently returned home to Chicago. Most recently, he was there in 1998 through 2014, when he was then sent to Peru. So this will be a very unifying thing for Catholics in Chicago, something they'll very much look forward to seeing how his papacy goes. David?
Cool. That's awesome, man. Really cool to see. Actually, let's continue to watch
Liz and the
these.
team at
Is this him
WLS,
live?
Thanks so much for giving
On
us
the
that
balcony?
perspective. And we're several Pope Leos before, but
Yeah,
Leo
look.
and the significance of that choice, standing up
Look at
for
that church,
social
bro.
justice around the world,
I've been to the Vatican
and
twice.
to stand up for workers, laborers around the world.
Did
He
the
said we
Vatican
must reach
tour.
out to those in need. He said, God loves everyone. A stunningly magnificent day here at St. Peter's Square. You can see the sun setting behind St. Peter's Basilica. The entire team will be here later today for a special edition of World News Tonight. Again, an historic choice by the Catholic Church. Pope Leo XIV, born from Chicago and the United States, spending time all over the world, and here at the Catholic Church in Rome, he'll serve as the next Pope. I'm David Muir from all of us here at ABC News. Thank you for being with us. I'll see you for World News Tonight.
So fire, bro. So fire. All right, there's a new. We're in a new age. A new age, guys. A new age. All right. With that being said, man, I'm still investing, bro. I'm still investing. Let me see how how the market's doing right now. Yeah, so you guys know the trade that I did was Shopify. I did a Shopify trade today. Sold puts on, I think, it was four puts, 4 contracts on Shopify, and I'm already up 5%. I've already realized $45 in premium. Now, I already got the premium. I can take this cash and I can go put it in VOO, QQQ, and I will when it's a red market. I'll put some money in into that. But yeah, it's looking good. Everything is green. This one's at 57%. This is Palantir. This is the trade that I made not too long ago, and I'm already, once it hits 70, I'll close that because I'm not going to wait a whole month, a whole 28 days for a couple $100. But I really like Palantir, and I might get more aggressive. Instead of doing 0.2 deltas, I'll probably, try to aim for a better return than that. But let's go ahead and watch this video because Palantir has so much room to growth, especially, with the current administration, with AI blowing up. Palantir is looking at getting into financials, into the financial sector. And then you have all of these conflicts happening overseas with, now you got Pakistan and India. I can totally see Palantir's demand continuing to grow. And we've seen the financials for Palantir. All I see is growth. So with that being said, let's watch what the co-founder of Palantir is saying about Doge findings and kind of where his head is at with what's going on with our country pretty much. And then I want to learn a little bit more about the CEO was saying about news, considering Palantir is looking at getting into the financial sector. I want to dig deeper into that because there's a lot of opportunity with Palantir, man. Palantir could be what Tesla was in 2013, 2014, right? Palantir could be 100 bag. I don't know if it could be a 100 bagger, but it could 5x, 10x, in the next 3 to 5 years. So let's check this out.
Legendary investor Paul Tudor Jones issuing a warning this week on the potential danger of AI.
There's a 10% chance that AI will kill 50% of humanity in the next 20 years. Agree or disagree? So I'd say the vast majority of the room moved to the disagree side. I had just heard Joe Rogan and Elon Musk 2 months ago where Elon Musk said, there's only a 20% chance that AI can annihilate humanity. Now I know why he wants to go to Mars.
Joining us right now, talk about AI and much more is Palantir co-founder and 8 VC founding partner Joe Lonsdale. Are you in the 10% camp?
No, actually I was at the same gathering that Paul was at. Paul's a friend of mine. But I think as you noted, I think the vast majority of the people don't think that's going to happen. It's very funny, Andrew, because I'm here in town and you're debating with the private equity and other guys about AI, and a lot of them are saying, it's not even having a big enough effect to affect margins, and I think it will. And then all the way over here, it's actually so good that it's going to kill everyone. And I think it's probably somewhere in the middle where it is going to have a big impact. I'm not as worried about that.
So, but one of the things he said, and maybe you can help us, is that he said that the folks who are running these AI LLMs, these large language models, were all in that camp. Meaning that I think it was every single one of them was in the scary camp, and they're the ones who are actually doing it.
A lot of the people building the model companies are very optimistic that they're going to be able to keep making these things much, much better. I hope they're right because we need them to keep getting better to have a really positive impact. I guess if you believe that it's exponential and they're going to get better forever, then it could change everything. I don't think these things are exponential. I think there's just a lot of other things we have to figure out before it changes the whole world.
Isn't it possible that we could hit the singularity with AI and we could all live forever instead of all dying? Isn't there a half full side of things?
I don't think singularity is really how it's going to work. I don't think the world just goes in exponentials and completely changes. I think there's more like essence.
What about
so you get something
sort of a hybrid? I don't know. We've been thinking about it, it's part hardware and part software on a human being.
Listen, the bio world right now, we're figuring out a lot of stuff about aging, and AI is probably going to be a big help there. I don't think it. I mean, yes, there are
all going to be. Half of us are going to be dead, or half of us are going to live forever.
There are new threats
Somewhere
where if you
in
get
between.
crazy terrorists doing things in bio, you got to be careful.
Right.
But
Fauci?
overall, that's a separate topic.
I want to raise Doge. You've been a big fan of Doge.
Yes.
And I'm curious, now that we have a sense that of sort of how far Doge has gone, and maybe Doge goes farther, I don't know. And I would argue $1 saved is $1 made.
Thank you very much. All right,
great
welcome back
on
to the
all of
Milken
that.
Global Conference
Having
here.
said that, my question to you is, it looks like Elon Musk is going to be stepping away at least a little bit as he moves more towards Tesla and feels like he's done a lot of the work that he can do in Doge land. And ultimately, he's saved, I think, something on the order of about $150 billion. My hope is it doubles. My hope is it gets even bigger. Who knows? But it's not nearly what he or the president talked about during the campaign, and it's not nearly what he talked about even a month or two ago. And I'm curious just how you react to that.
Well, listen, we're, just over 100 days in. I was just down having dinner with a bunch of the people working on Doge. These are amazing people, many of them self-made billionaires who are getting paid nothing to go in and work really hard on this. And it is shocking what they're finding every week, right? So the fact that it's like about $150 billion, that's per year, right? So you have to extrapolate that. That's a multi-trillion-dollar savings in terms of what's worth.
I am
right?
not poor-mouthing what's been done here. I'm saying it's great that we found the stuff. I'm just saying that if you tell the public one thing and you're unable to get even within, we're 10% or 20% of what the
Well, listen, I'd say we're just getting going. I'd say so Elon has a certain number of days he's allowed to work, but there's a lot of other people there. Some of them are now full-time who are amazing people. I mean, just the fraud and entitlements, and I talk to those people, it's probably $200, $300 billion a year, just the entitlement fraud. They're just getting going on that part of it. And they've just referred a bunch of stuff to the FBI. We haven't even seen all the arrests you're probably going to see yet from all sorts of ridiculous kind of fraud going on, all sorts of people doing all sorts of illegal things with parties and private jets and, paying money to dead people, which probably means the money was going to some friends of people. I mean, there's all sorts of stuff we're just getting into.
Was it orchestrated fraud, or is it one-off stuff that like little petty criminals are doing? Or do you think this is actually connected to people in the government?
I think that the thing that they need to do is not just to take out the petty people, but I think there's senior people who very clearly are tied. I mean, when you have a $4 billion account that's being used for giant parties and all sorts of things at the Department of Education, right. and then once you ask for receipts, all of a sudden you get nothing more out of that account. I mean, you get there's some really sketchy stuff that we're finding.
Inside government?
Inside, there's hundreds of agencies. Some of these agencies, it was very clear they were buying art from the relatives of the people running them. They had all sorts of things on the walls. The whole agency was clearly like other people's money, and no one had watched them for 30 years. I could see how human frailty, you say, oh, wow, this is free money. We're allowed to move it into our own accounts every year. And when you showed up with some of these accounts, the accountants were deleting everything as fast as they could, billions of dollars of records. I mean, there's definitely going to have to be people to go to jail, and there's a lot more to find in these places.
Wow. Why have we not heard about the actual details yet?
Well, I mean, they've been on TV. They've been putting out a lot of details.
No, but very rarely have you heard about the names of who the people are or where what it was. I mean, I've heard that there's a party in an arena somewhere. I have no idea what the party in the arena was, what arena, was it, who were the people who did it. I mean, don't you want to know these things?
I'm really eager to see the DOJ take action. I think the way that the FBI works, even when it's run extremely well, is it sometimes takes a few months to take action. I would like them to hurry up as well. I think it's really important for the American people to see some arrests here.
Right. What about, so the other piece on Doge, though, is that about half of it, more than half of it, has not been fully itemized, right? So you can go on the website, you still don't know what a whole bunch of it is. How do you feel about the transparency issue? I think that the public, I would think, would want to know exactly what's going on.
Listen, I think the times they've got together and got on TV and talked about it, I think the things they're putting out are good. I totally agree. I think the more they put out, the more they invest in the media side of this is going to be great. Listen, it's only 100 days in. They're working as hard as they can to find and cut off the bad guys. There's a lot of work to do here still.
Yeah, very interesting. I definitely don't want to dive into the politics too much of this, but I wanted to show you guys. I've never really even gone to Doge's website, but I mean, they're more transparent than our government has ever been. It looks like, right? Have you guys seen this? If you go to Doge's website, I'm not sure why it's not uploading. There we go. But you can go to their website And there you go. You'll see estimated savings, amount per taxpayer, and you'll see the leaderboard. They have a leaderboard. You can see payments. And they're showing you what department. I mean, they're not telling you names, but you can do the math, right? You can see who the recipients are, who's involved with the American Councils for International Education. Spend. You can see what each department is spending. The workforce, regulations. And I don't know why it's not loading right now, but before there was let me see if it's because of this. Before there was a whole timeline with screenshots and receipts and stuff, but I'm not sure why it's not showing up now. It wasn't too long ago it was showing. Let me see if I can redo that. Doge.gov. See if it'll pop up. There it goes. So you guys can see, statements, stuff like that. They're sharing on here. So I just think this is developing. They're 100 days in. Honestly, what they've accomplished in 100 days is pretty impressive. Even though they promise even more, it's still impressive what they've done so far. But that's not why I want to look at Palantir, even though that's some crazy stuff to hear. And the co-founder of Palantir says people are going to go to jail. Like, there's some really bad fraud. Some of it is like whatever, but there is some fraud. Let's check out Palantir. And then E-Blends, I'll answer your questions in just a bit. Oh, Ali, you started a podcast? Yeah, man, I'll lock in with you, bro. Next week if you want. All right, let's check it out.
It's here in Beverly Hills. We got a big crowd behind us here. Now, shares of Palantir, they're down today. They had their earnings last night. Most people said the earnings were good. So what exactly is going on? We'll talk about that. But
that's
the real news is
sold
this.
a put.
There is a big deal that is being made in AI today between Elon Musk, XAI, TWG Group, which is Thomas Tull, Mark Walter Investment Group, and also the aforementioned Palantir. And we're joined now by Thomas Tull and the CEO of Palantir, Alex Karp, in a Power Lunch exclusive, guys. Thanks for your patience. Appreciate you being on. Why do this deal with TWG, XAI? What does Palantir get out of this?
Well, first of all, Thomas is a legend in the investing community, and almost all the successful defense tech startups have been financed by him, and has a reputation second to none. And I know his work and his reputation in the defense tech startup world, which we know very well. And without him, many of the great startups that come after Palantir would not exist.
Barbers will
the mission
appreciate
of
it.
Palantir is to give an unfair advantage to our friends. And if you look at what regional banks have been saddled with regulatory hurdles and deep technical issues, almost all of which can be solved by the combination of his insights into banking, which he's one of the most successful people in the world at, our tech infrastructure and large language models and compute. And that combination will bring the unit economics of a company like Palantir to regional banks and allow them to do what big banks are claiming to do, and grow their revenue at much lower cost.
He's very nice, Thomas. I mean, very complimentary, but here's the sad reality of AI. Every company wants to say, I've joked, Alex, we're going to change our name to CNBC AI because you get like a valuation pop. AI is really good at taking money. It's not been very good at making money.
I think that's exactly right. You get pitched things like that all the time. And in our case, we hired Drew Kukor, who's a very well-known practitioner in artificial intelligence, built JP Morgan systems, and built out our team. And before we put this together, we use it at Guggenheim. We use our platform on all our systems, and it's made an impact, a material impact. And everything we talk about is, if you made $1 before, are you now making more than $1, or are you just talking about it? So that's what we're.
Most people are just talking about it.
Okay, but this is the thing. You've got to judge a company or an institution by the fruits they bear. And the thing at Palantir is we're quite good at making money. So we're highly profitable. There's a rule of financial hygiene called a rule of 40. I think the highest ever recorded, or one of the highest ever recorded, 83. So we make money by being downstream of value creation. At Palantir and with our partners, we own value and we take a part of that value and get paid on it. So we're not going to be making any big money unless the people we work with make even more money. And one of the problems of the AI revolution is it's a tale of two cities. It's a tale of people who take your money and give you flowery language. In the past it was woke, now it's like you get to feel good about something that's not true. Or you can partner, and we partnered together in his bank. So you can already see the value creation, and we see this across every industry.
Crazy.
Where the unit economics
All right.
change, which is why
Let's see what
Palantir
the
is
stock
growing
price is
71%
looking like.
in the U.S. commercial.
We're going to get to that in a second, but I think I would say this. It's fair to say that AI, Thomas, is like the seed. We're planting a seed and hoping it grows into a tree. With this deal, you're kind of already buying the tree in a way. Palantir's built out. XAI, they've got the infrastructure sort of built out, that giant processing center in Memphis, Tennessee. That's right. Lots of land, lots of fresh water, by the way, lots of electricity, the stuff it takes. How quickly does this put you sort of, quote, in the game to sell money?
All right, I officially messed up in my investing career. Damn it, I could have bought right here at $74, April 4th, when I was telling y'all this shit's underpriced. Look where it's at now. You could have almost doubled your damn money. And look, Palantir's a great company. It's got a $279 billion valuation. I might just start dollar cost averaging. Everything about this company screams a win. Everything. Everything. Let's look at the product. Let's look at the actual product.
So maybe like some examples of some other like Palantir for Builder customers, just to kind of give the shape of some different, customers of ours.
Real-time data, AI agents, and zero-code automation. This is how Palantir is changing the game. Check this video out.
Yeah, so we have over 150 customers in the program. And so I can give a couple of snippets, but it really is cross-industry. And so I think two examples that come to mind is one, HelmGuard AI. They're a really early startup. They started in 2024. And Jack, the CTO, I actually met with him a couple of weeks ago to really understand what they're building in the platform. And they're sort of a security and compliance startup. And so supporting large enterprises with their security reviews and compliance reviews as they come in, and trying to do the coordination of, you get these different due diligence questions or compliance questions, you have your policies and your documents sort of spread in disparate systems and they're all in natural language, and so how do you actually more easily answer these questions? And so sounds very much like a Foundry problem, right?
I remember seeing Jack present at DevCon. I didn't realize he was an early stage startup. Because it was that impressive of a demo. That's awesome.
Yeah, and so he's using AIP Agent Studio, Automate in the back end, and some of our functions workflow as well. And then the front end is all OSDK. So they've built a customized front end, and if you are a HelmGuard customer, that's how you kind of see HelmGuard. But ultimately, all the back end workings and what's allowing them to scale and really grow at pace is because they're building in Palantir. Wow. And they were able to go to market in about 3-4 months.
Wow.
Which I think for that level of workflow, so high security environment, but then it's fairly difficult to be able to process that much information, all the special chunking, so that when the questions get asked, they are sort of automatically answered and then processed through the relevant teams.
That's very cool.
This is a textbook example of how Palantir bridges innovation with operational rigor. HelmGuard isn't just building fast. They're building on a foundation trusted to handle the most sensitive data workflows. And that's a serious edge in the compliance game.
Yeah, so what other kind of shapes? So we got some early stage startups. What about maybe some midstream companies?
Yeah, so in terms of the mid-sized companies, Goodnight Midstream actually comes to mind. Yeah. And so been working with Michael and Robert, our builders there. And they're sort of a midstream oil and gas company. And so they have a full network of their water pumps. And they're kind of taking tons and tons of water every hour and trying to manage those pumps at scale. They've, of course, invested in sensors, as a lot of growing companies do, but actually making use of those sensors beyond having all of the graphs that just show you, what the current vibration is, what the water pressure is, and just making sense of all of these different lines ultimately, they were finding really difficult. And so yes, they had a full kind of SCADA system, but the interface on top of that starts to do streaming alerting and actually tells operators, hey, this is what you need to do, what you need to change, and when you need to do it. That coordination they were just unable to do. It was always post-mortem analysis of something went wrong and you're sort of understanding, okay, this is what went wrong. But now they're actually doing this predictive and preventative changes in the platform. And, I had a build camp with them and they were able to build out 2 workflows that they said would have taken them a year to do in other systems.
When SCADA systems stop being just passive dashboards and start evolving into true decision engines, everything changes. You're no longer just reacting to issues after they happen, you're actively preventing them before they disrupt operations. That shift from hindsight to foresight is what Palantir enables. By unifying real-time data, predictive analytics, and operational workflows into one seamless platform, Palantir gives companies the edge they need to move faster, operate smarter, and stay resilient in the face of complexity.
You bring up a thought to me because I don't think we do a good job of telling the story of how good streaming is in Foundry. It's it is truly a first-class system. The fact that I can use Pipeline Builder, low-code environment to build out streams, generate alerts, that entire kind of event-driven, stream-driven stuff is actually at our core. Yeah. When you're on the battlefield, you have to have real-time stream. So we don't think much of it. But that is core, but it also becomes more important for not only these sensor workflows, alert workflows, but agentic workflows. Yeah. You have to have the latest information, especially if you have agents taking action. Mm-hmm. You need the data to flow back in real time. And so that streaming it as a first-class citizen, I don't do a good job of always selling that and showing that, but I think it really is something I could see for the Palantir for Builder customers is people in that space, man, it accelerates the workflows just dramatically.
It really has, and Michael and Robert really took to Quiver very fast, and that's a workflow that I've used a couple of times. It's very powerful, but I think the learning curve can be steeper. But they have really cracked it, and I think our product team worked directly with them to kind of do our time series alerting, which takes the work that you did in Quiver, your analysis, and turns it into an alert. And so you go from ad hoc analysis to preventative action in one button. And that was something that was perfected through our work with Goodnight Midstream, who are a Palantir for Builders customer.
Okay, well, I just learned something. Yes. I didn't know we could do that now. That's awesome. Yeah, yes. Quiver's kind of the dark horse. It is an awesome, super powerful tool. It is very technical, but I didn't know you could generate alerts out of that. That's really cool.
Yeah, and then Automate kicks that off so that if that condition happens, any downstream action or anything you need to do gets automatically generated from that.
Isn't this
crazy?
Wait.
Work with Goodnight Midstream.
It's kind of the dark horse out of that. That's really cool.
Any downstream action or anything you need to do gets automatically generated from that.
Isn't this exactly what modern operations should look like? Real-time data triggering real-world action without human lag or friction.
Wow.
In a world where speed and accuracy define success, having systems that don't just analyze but act is essential.
Wow.
With Quiver and streaming capabilities at the core, Palantir isn't simply enabling automation, it's creating dynamic intelligence that adapts and evolves in real time. This is operational execution that learns, responds, and scales with the moment.
So you could have time series flowing in, generate an alert that triggers an automate function that calls an LLM to determine what I should do about it.
Exactly.
Holy cow. Okay. Well, I learned something. That's cool.
It's going to take a lot of damn jobs.
So what skill sets do you see people needing or coming in with, and kind of what do the team structures look like in these different companies?
Yeah, that's a great question. So I really often get asked around, do I need an army to deploy Palantir, or what type of engineers do I need? And I think really the advice that I give is very similar to how we structure our teams internally. So you sort of have one more data engineering style profile where, you can do a lot in the platform with low code tools. But if you have someone who has more of a computer science background or is flexible with code, they can have more reach within the platform. And then I think that person paired with more of a business analyst or low code user who really understands what the business needs, what's the value that you're driving in the use case. I think the two working in tandem works like really well, because that's how we built the product, with our team structured that way. And I've seen our customers adopt that as well and have great success building use cases in, you know, a number of weeks.
Yeah, the Echo Delta pair, whether you're inside or outside, still seems to be the magic.
Yes, yeah, and both are FDEs. After long debate, I think we can definitely say that they both are. And then, you know, going back to other ways that people learn, we've also got our events, and so everything from DevCon, where we just had DevCon 2, but we have build camps that we host in our offices at our customers, and they're really hands-on hackathon style events where you have a goal of what you want to build, and Palantir engineers sort of help you get there, and you can really learn through osmosis that way. And so
Bitcoin's at 102,000
embedding with our product development team, but also some of our forward deployed engineers, and I think through osmosis we're kind of seeing this builder spirit being built as well.
The emphasis on hands-on learning through build camps, DevCon, and side-by-side work with Palantir engineers really underscores that this isn't just a platform, it's a full-on community of practice. Wow. It's not about sitting through lectures or reading endless documentation. It's about embedding yourself in real problems, building real solutions, and learning through doing. That kind of immersive collaboration doesn't just teach the tools, it builds intuition, confidence, and long-term capability. In many ways, it's the fastest path to mastery, and it reflects Palantir's deep commitment to empowering builders, not just users.
That was a continual theme I heard, which was just awesome to see how much these build camps like jumpstart that building in Palantir, understanding the different primitives and dynamics and how things work, all just in a few days.
Yeah, no, and I have my own personal sort of philosophy around building, and it's sort of, you know, if you want to learn a language, you don't sort of, you know, study it without practicing it. And I think learning the platform is a little bit like learning a new language. You really just have to get started, and it's about building that first solution. Maybe it takes you a little while, but then you're putting stuff together and still trying to figure out what the platform is. But then once you've done that first use case and you can iterate on it over and over, that's the thing that then gets that improvement, because the next use case you can reuse a lot of the components from the first use case, and you sort of see this building over time and improvement over time. And so the best way to learn Palantir is to build on Palantir.
So you've been accomplishing a lot in the last year and a half. Like, what are your goals in future for the next year?
It's honestly growth. So as I mentioned, we have about 150 customers at the moment. I'm seeing that sort of explode in the next year, and I really want to see us in more industries, more spaces, behind different products that are coming out, but also these different medium-sized companies as well, and really seeing, you know, this perimeter that I've been talking about push to the very edge, because I think that our customers are going to be what pushes our product as well. And so I think we're going to see a lot more product innovation that comes from the challenges that we see in the Palantir for Builders program. Cool. I think a lot of these challenges that we're seeing in the enterprise have worked and are covered across the whole market. But once we really get into every space and every industry, I think it's going to stretch our product and ultimately lead to a lot of growth. And so I want to see the Palantir for Builders program being bigger in a year, but definitely I want to see the impact that it's had on our product and ultimately just building this developer culture that I mentioned. So
fire, developer culture, kind of like the Apple App Store, right? That is so fire, bro. And I am so mad that I didn't do my due diligence on Palantir sooner. I always knew it was a great company. I always knew that it had a lot of potential and that we're early. But I didn't understand the product. You know what I mean? And that's the difference between whether or not I'm willing to pull the trigger on something, is that I actually like the product. I use it. So Shopify, I love the product. Tesla, love the product. NVIDIA, obviously, everything we use is dependent on NVIDIA at this point in time. Apple, love the product. Amazon, love the product. You guys get what I'm saying. Even Celsius, the stock that I showed earlier, I love the product. Palantir, I don't really know, but I love AI. I understand how important automations and systems are for a company. And I wasn't really into it at first because it was just in the military space, in defense. which is cool. Like which is a huge industry. Don't get me wrong. And with all the conflict that we have in this world, obviously Palantir is going to be needed for more defense. But I also don't love the idea that a company that I buy performs better with more war, with more conflict. But that's not necessarily the case, because no matter what, we're going to need defense. And Palantir makes it it's one of those things that you're going to purchase even more with the threat of war, but it's going to thrive regardless if there's war or not, because Palantir is such a anti-defense type of thing, right? That's not even the right word for it, but hopefully you guys get what I'm trying to say here. But now that I'm hearing, people that are part of the team that's building Palantir talk about how they're excited to get into other industries, and then you hear the actual CEO here talk about, they're bringing AI to financial services, and this is an actual CEO of a bank, co-chairman of TWG Global. Let's hear why he's excited about working with Palantir, because now that I'm listening to all this, I'm mad as hell I didn't buy down here. I'm mad as hell I didn't buy here. And I'm not, like, if it wasn't for the fact that it's almost at its all-time high, I would have bought 100 shares right now. And I probably would have been doing covered calls right now. But if you look at the charts, $124 seems to be resistance. And so I kind of want to wait it out. I'll probably start dollar cost averaging now. So you guys, if you've been listening to my live streams, I put $1,000 a week into the stock market, into my brokerage account, not the stock market, into the brokerage account. Of that $1,000, I put $400 a month into $200 into QQQ and $200 into VOO. I think I might start adding a little bit more and dollar cost average, or I might just do $100 into Palantir every single week and dollar cost average. But the moment I see this thing dip, like it did here, damn it, I wish at $74, I would have 100% bought 100 shares, knowing what I know right now. But that's okay, because if I look at this company, $279 billion valuation, and I look at the potential of this company, let's look at somebody like a Tesla. Not saying that they're gonna be as big as Tesla. They have room to grow here, and Tesla has room to grow, because when you look at somebody like NVIDIA, you see there's companies that are $3 trillion. What's Amazon? Whoops. Let's look at Amazon. Amazon is a $2 trillion company. So NVIDIA's bigger. And NVIDIA, I was buying NVIDIA in 2019. Damn, when it was 11 billion. It's crazy how huge this no, that's revenues. I'm sorry. I was buying it when it was, but I was buying it in 2019. But damn, the revenues skyrocketed. What was the price? Yeah, see, so I was buying this shit at 2019 when it was like $5-10 a share. I remember it was like $8, $9, $10 a share. Look at this shit now, bro. 100. Okay. But nonetheless, people are still buying NVIDIA. NVIDIA still has a lot of growth, because even though it's huge already, I'm not saying it's gonna 10x. It would be literally the size of our economy type of thing. But what I do think is that AI is going to continue to grow, that the global GDP is going to continue to grow, and NVIDIA is going to be a huge part of that. So I still like Palantir as an opportunity, but now that I see the valuation, I should have caught Palantir sooner, unfortunately. I genuinely believe. I was investing in Palantir down here, dollar cost averaging down here, but I sold it once it jumped up, because I wasn't a huge believer in the company. Not a time to buy. I'm gonna wait till it drops. I'm not gonna dollar cost average. I'm just gonna keep selling puts on it. And if I get assigned those shares, then I'm happy with it. right? Because long term, I think I'm winning with Palantir. So it's just going to remain part of the companies that I look at. HIMS is another one, and let's listen to what this chairman of this bank has to say. But I think I know what I'm doing with Palantir.
Money making AI to Wall Street and insurance companies and more.
Right now. Because, again, we have been doing this. You know, Mark built an incredible financial empire.
Mark Walter.
My partner, Mark Walter, 30 years of doing this, has an incredible deep knowledge set around finance, structure, et cetera. We know that world deeply, and we know what's possible now because we've done it. So we're not asking others to do anything that we haven't done ourselves. So by this year, we'll be out with major customers across banking, insurance, money management, and I think by having Palantir, their tool set.
You already have customers interested.
We absolutely do, yes.
Already?
Already.
And you just announced it this morning.
Yeah, we've been working on this for a while. You better have some substance by the time you announce this. We're very excited about it. And with XAI, not only do you have their models, but as you mentioned, their compute is unparalleled.
You know,
by the way, slight pushback. It's not just making money. It's making money with less money invested. And what makes AI very special
Higher return on invested capital.
is not just that you grow the revenue in partnership, but the cost of getting the revenue should go down radically. And this, again, is particularly important for smaller institutions, because in the past, the way you would do this is by investing billions and billions of dollars into complexity, and the smaller institutions could not weave their way through that complexity. But what we can do, to use your metaphor, is supply the pre-built tree of your knowledge, XAI models, and our software infrastructure, and that pre-built tree lowers the cost of revenue and allows you to increase the amount of revenue you can take.
Because you know what I'm talking.
That's huge. That's huge for companies. That's huge for your addressable market. Man, Palantir is definitely on my list of. I just got to keep tracking it, man. Keep tracking it. I like HIMS. I like Palantir. I like SoFi. I like Tesla. I like Nvidia. All of these great companies. There's restaurant companies that I really like. Matter of fact, let me look at Texas Roadhouse. It's been a while since I looked at Texas Roadhouse. They were always such a good company as well. And I stopped buying it. And look, I'm looking at this. I'm like, bro, I should have kept buying it. Look how great of a company Texas Roadhouse is. Continuous growth. Number of restaurants continuously grow. All their restaurants are always busy. Look at their free cash flow. It's insane. Earnings per share, insane. Cash versus debt. They got some decent debt, but they can, between their free cash flow and their debt, they can pay this debt off quick as hell. They're buying back shares. What a great company. And it's only worth $11 billion. I need to go ahead and you know, it's just continuously growing. And I need to keep paying attention to this company. Let's see what the valuation has been dropping. It's at a 26 PE. It's at a 26 PE. You know, what are restaurant stocks usually trading at? Let me ask ChatGPT. What is the average PE of restaurant stocks? Let's see if ChatGPT can help me with this information here. Come on, ChatGPT. Because even Texas Roadhouse, I need to go ahead and put that in there. So there's so many ways to make money here with great stocks. I'm just going to sell puts on all these stocks. If I get assigned, I love the company anyways, right? So the typical PE ratio for restaurant stocks right now, if you look at this number right here, is 21.9. So if you care about PE ratios, and like Warren Buffett will tell you, PE ratios don't matter. If it's a great company, buy it, because you're in it long term anyways. Let me see what the market cap on this restaurant stock is 11 billion. What's the highest market cap? What is the highest market cap in restaurant stocks. We got to compare apples to apples, right? Got to compare apples to apples. The stock, that website is called Qualtrim. Let me show you guys. It's $10 a month. I think it used to be $10 a month when I first bought it, when I first started using it. But I love this software. It's called Qualtrim. Okay, a YouTuber created this that I learned a lot from. Bought all his courses. I bought a lot of courses on stocks. And the stuff that stuck with me that I enjoyed the most is what I keep in my system, pretty much. And so I've developed my system by learning from a bunch of YouTubers, the Swedish Investor, Invest with Brandon, the guy who started Qualtrim. And then I've read so many books from Monish Pabrai, from I think it's Dominish. I showed you guys his stuff. From Martin Shkreli. I've been learning from a lot of these guys, and the stuff that sticks with me is what sticks to my what I use in my system, and it's like second nature for me at this point. But what I was looking at, we gotta look at apples to apples. The stock ticker with the highest market cap, it is, drum roll. What do you guys think? I did not expect this to be the top three on, well, one of them I expected not to be in there, but McDonald's has the highest market cap with 200 billion. It's going to be really hard to catch up to that. Starbucks is at 93 billion. Chipotle's at 68 billion. And so like 30 billion. Can Texas Roadhouse catch up to these restaurants? Maybe not, but it does show that there's potential for, I think Texas Roadhouse can grow with the financials that it has and the room for it to grow, and the fact that all their restaurants are always busy. Could it reach 60 billion? Probably. 40 billion? Probably. Is it something you want to sell puts on? I don't know. I haven't looked at the options chains for Texas Roadhouse. I can take a look at it now. Let's do that. Let's take a look at it. And let's see if there's money to be made with stock options with Texas Roadhouse. Because if there isn't, then I'll take it off my list. Because that's the only way I'm buying it is if I get assigned stocks from puts that I sell. So let's go to the options chain here. Here it is. This is Texas Roadhouse. I like to look at it 30 days out. So we'll do June 6th, June 13th. We'll do June 13th and June 20th. I'm going to set those. We're selling puts, and I'm going to look at all the strikes. Let's apply it. Okay. $173 is the shares, is the stock price. If we're looking for a 20 delta, we're going to be at 160. Okay. And the spread, the bid-ask spread is crazy high. Yeah, I don't know. Here. Let's go down here. Let's go to the 20 delta here. Okay, this is doable. So, but the spreads are crazy. The bid to ask is crazy. I don't know that I would buy this. It's too much of a difference. So like people are, you can ask for $3. And so, somebody might sell it for $3, might buy it for $3, but people are bidding $2. It's a whole dollar difference, $1.10 difference. So I'm not sure about this one. But in a perfect world, if I can get $3.20 in premium on a 22 delta, what's the return on that? Let's see. 100 divided by the strike price is 160 times a premium of $3.20. Hold on. What was it? $3.20. 2% return. It's not. I'm not doing it. So I'm not selling. I'm not doing options with Texas Roadhouse. So I'm gonna take that off my list. If I was just a value investor and Texas Roadhouse was on sale, maybe, but it's not worth it right now. So I'm taking that off my list. All right, let me go down to answer questions. A bunch of questions have come in. So let's do that. And then I'm going to end today's live stream. Glad you guys were hanging out with me today, though. We've been on for 3 hours now. And what I realize is that people be on for 10 hours at a time, which is crazy to me. All right, let's look at this. Basio, would you ever invest in startup companies? I've talked to a lot of engineers and startups. The only way you can invest is if you have like $1 million plus in investment. That's not true. It's that, or you need to make I think it's like $250,000 a year on paper. But no, I wouldn't invest in those. There's plenty of opportunities in the stock market. Plenty. Like Warren Buffett made most of his money in small and mid cap stocks, and now he's too big to invest in those because you'd have to buy the whole companies. But there's a lot of opportunity in small mid caps, and I've even taught you guys how to do it. Like this is a filter here that like depending on what your priorities are, you can invest in small mid cap stocks, and they're riskier. Don't get me wrong. So let me give you an example. This is Sprouts Farmer Market. Have you guys heard of Sprouts? SFM. Okay, let's look at SFM. If you've never heard of Sprouts, I love this place. Me and my wife shop there all the time. They sell organic. It's a supermarket that sells organic products, and it's very inexpensive for what you get. The market cap is at $15 billion. It's a small company. But look at its revenues. It continuously grows. It's continuously profitable, continuous free cash flow, net income. Its debt, it has zero debt, $260 million in cash. If you can get this at a good price, like right now the PE ratio is high, it's 36. But there's times where this comes crashing down and it's a buying opportunity. Like for example, in April, or not in April, but when everything came crashing down, this might have been a smart buy, and it might still be a smart buy. Look at the price. So you might have bought it at 144 when, the whole trade war stuff was scaring everybody. That might have been a good time to buy. Or you might have been paying attention to Sprouts when they were opening different locations in your area a year ago. That's a great time to buy this. And a year ago, you still would have had great financials. Oh, and by the way, the reason why I found this company is because it meets all of my criterias. So it's a small to mid cap company. It continues to grow by 14%, and it's projected to continuously grow by 14 above or higher. 5 years of historical growth in earnings per share, and so there's only 50 companies that are meeting this threshold. So that's why when I went and looked up Sprouts Farmers Market, I knew it was going to hit all my numbers. The question is the price right? Right now, the price is a little expensive, but I might put it on my watch list, and I might put an alert that if it drops by 10%, I'm going to buy some of this stock. That's how you do it, guys. It's almost like watching SportsCenter every day, except the teams that you're watching are the companies you use every day. And the players that you're watching isn't LeBron. It's this guy. And it's this gal. And it's fun because, like, there's people who make money from sports betting, but there's an entire Forbes list of people who make crazy wealth by investing in great companies. And so you don't have to do it on the private side. You don't have to get in super early. Most people who do private investing, the reason why they make it $1 million in assets or in investments in assets that aren't your home, isn't a primary home, or $250,000 in income a year. The reason why they make it only legal for those people to buy is because most of the time, people who make that type of money, they are more educated on financially, on personal finances. And so they understand that chances are you're going to have to invest in 10 companies for one of them to hit. And you better have the money to do it if you're going to do it on the private side, because I don't like investing in startups. I like starting startups. And I've done many startups. Pi Accounting is a startup that I started. Tomb 45 is a startup that I started. Headlines is a startup that I started. And thank God, God is good all the time, man. All of these startups have been successful. And they are how I built my wealth. But in order to save the game and diversify, you should be in the stock market. And that doesn't mean you can't do it as a barber. I teach barbers that make $200,000 a year, $150,000 a year, $250,000 a year. I teach them how to invest in companies in the stock market to continue to build real wealth. Because at the end of the day, these are portions of companies that you own. So it's perfectly fine to not do private. I actually recommend you do public, because at least a public company has been through regulation. Their books have been checked. There's still scamming being done in public companies. Look what happened with what was that company? The EV company, not Rivian, Nikola. That company Nikola. Remember that? That was a big scam. Remember Enron? Big scam. But that's why you also have to you have to dig deeper. You have to look at the CEOs, the financials, the product. Do you actually like it? And you don't buy something that doesn't have a product that's being in use, okay? And that's why I don't like private companies. There's so many opportunities out there, guys, especially in 2025 with constant access to data. You know, people used to have to read the newspaper, or they used to have to be subscribed to the Wall Street Journal or something. And they used to have to read financials, printouts all day. That's why Warren Buffett didn't have a computer for most of his career. But now we have access to it quick as shit right here in front of our screens. And I don't like day trading because that's a part-time job. The best way to make money is to focus on the main thing that you do. If you're a barber, if you're a hairstylist, if you're a damn accountant, focus on that, be the best at that, become a top 10% income earner in that field. And then you start taking some of that money by living below your means and investing it in assets, real estate, other businesses, or public companies like the stock market. That's what I recommend, bro. Sorry if that was a long answer. Hey, Georgie, Georgie is my video editor. I think you can clip that by itself as advice. So advice to this question, would I ever invest in startups? The problem is that you got to have a certain amount of investments or whatever to be able to invest in private companies. This is true, but I also think it's a bad idea. You shouldn't do it. There's plenty of public companies that you can invest in. Have you got advice for balancing serious grind and enjoying the journey? Yeah, I've made a bunch of videos on that already, guys. I highly recommend, bro, that you check out these videos. Let me show you. I'm gonna go to my YouTube channel and show you guys. Usually videos where it's like where the let me see if I can find it. My back's starting to hurt. Let me use the backrest here. Scoot in. So this is my channel. Like, there's videos like this. Want to start a new business? Don't make these mistakes. I talk about balance. I talk about lifestyle businesses in that. This one, no wife, no kids, and full of regret. I talk about balance, working with your family in there. This one, feel like a slave to your business. 5 lifestyle business tips. That's exactly the topic that I'm covering, the question that you're asking. Your job is all you need to reach financial freedom in less than 10 years. Watch those videos. They're on there, and they'll answer that question because it's a very important topic. It's a struggle that everybody goes through. And so I constantly do cover that topic because it's important, man. I know a lot of people struggle with that. So good luck. Let me know what you think about it. Comment on one of those videos if you watch it. If it does help you, I'd love to hear from you. JP Studies Med. And congrats to you, man, on the grind. And you're 25 years old, bro. You know, you're a follower of God. You're married, you're hustling, you're going after you're in the final year of your medical degree. It's beautiful, man. Enjoy the journey. Definitely study that. You can have it all, bro. You can have health, wealth, life, faith in God, love, experiences. You can have it all. You just gotta make sure that you're doing the right things that are necessary to have those results. And I try to share as much of that as possible because I had to learn the shit the hard way, and I think it's very wise of you at your age to be seeking wisdom from somebody who's already gone through that journey. I'm 36 now, and I went through this struggle at 25, at 26, at 27. So God is good. At 30 years, I got to step away from cutting hair behind the chair. I've been retired from barbering for 5 years now, and now I do what I love to do. I do what I love to do. I've been documenting it for years. I'm very transparent about that, and you know, like, it's rare to find people creating content as much as I do that actually have done the shit and have documented it for a decade on my channel. You know what I mean? So yeah, go check out those videos. Let me know what you think. Have you seen MAGS? It's a good ETF. It's AI managed. I'll write it down and I'll do some research later. Thank you for sharing that one. I'll definitely check it out. I think that I love ETFs that give you exposure to a certain industry, a certain sector, or a certain type of investment. It just makes it a lot easier, right? So I'll check out that ETF. Oh, is this a good stock to invest in? So you're riding your bike around town that's dope, man. I love that. I hope more people do that. That makes me feel good. Like, that's what I want. I want this to feel like almost like a podcast that you can just put in your headphones while you're in the shop, or even put it on in the shop. And maybe it'll start, you know, thought-provoking conversations in the barbershop, right? Because in the barbershop, this is the shit we should be talking about. This is the stuff that the next generation needs. We need to be talking about health, wealth, finances, politics. I don't give a damn, man. This stuff affects our life. Current events, culture, and you know, I love everybody. We are all God's children, and I hope people can see the value in this stuff. So it's dope to hear that you're just listening to this on your bike, and you said you got it now. So yeah, Palantir I think is a great stock, but you know, there's caveats there, right? I just came in, hate to interrupt, but I take my tour for school tomorrow because of inspiration you gave, bro. Salute to you. Thanks, bro. Salute to you for making the jump. And I pray for, you know, a prosperous career for you, brother. Congrats on that, man. I answered that question. What is a good stock books recommend? Missed that part. Man, there's a lot of stock books. The Snowball, the Dondo Investor is the one I would start with. The Dondo Investor, DHANDHO Investor. This is what the book looks like. It's one of my favorite books. It's a easy listen if you like audibles. But it's also, I think it's an easy read. I was so entertained by this book. And it just reminds me so much of my come up as well. So this is what it looks like. It's called The Dondo Investor. And the guy here, Monish Pabrai, he's a billionaire. So he's a billionaire. He did it through public stocks, through public companies. In the beginning, he did it through his own businesses, like I did. And then we started to save the game and diversify a little bit. Not diversify too much, but we took some of that wealth from the private businesses that we started and started investing in great opportunities, because there's a lot of great opportunities in public companies. It's just so much easier, less stress. You know, you're able to do all this stuff, and it's super liquid from your phone, bro. You know, a lot of my trading is a lot of my investing's on my phone. It's crazy in 2025 that we can do this. We're blessed. You know, back in the day, you couldn't do this. Number one. Number two, you had to pay for every single trade. Number three, you had to buy the entire stock. There was no fractional stocks. Number three, you had to have like a $10,000 minimum to open a brokerage account. A lot of times you had to call in order to make a trade. It's crazy. It's wealth is accessible to everybody in 2025, you know? Let's get back to these questions. Sorry I was on the call. Did you get my message? Yeah, we can do the podcast next week. Let's lock in a date. Check out The Honest Company. Yeah, I'll check out The Honest Company, Leo. I've heard of them. I don't know. Are they a public company? One thing too, guys, if you can't find a brand that's a public company, sometimes there's indirect ways of still investing in that brand. Because you could, for example, if there's a small distributor and they have a exclusivity to a brand that you like, chances are if the distributor is small enough, that brand is going to impact the distributor's profits and revenues going forward. So maybe you can't invest in the brand, but you might be able to invest in the distributor of that brand Does that make sense? So sometimes you can find ways to invest in a brand even if they're not a publicly traded company. Something to think about. I appreciate the wisdom. I never really try to message or anything because I know I'm the only one responsible. I'm reaching out now because I'm after mentorship, as I believe there's a bridge between barbering and healthcare. That's dope, man. Don't want to give out too much, but if there's a way I can probably, my email's on the bottom right corner here of the screen. That's why I put it there, just in case you guys want to reach out on a private level. Feel free to email me, bossio@tune45.com. All right, guys, this is the last thing I'm going to do, and then I'm going to call it a day for my stream. I'm having so much fun streaming, man. Let's see if The Honest Company is a publicly traded company. Isn't The Honest Company owned by a celebrity? There's a lot of celebrities that stopped being celebrities and got into business. And one of those, I remember reacting to that podcast, the Gilbert Arenas podcast, and McCants, he said, man, after I went through what I went through playing overseas in Venezuela where I got robbed, I realized being an athlete, being a celebrity, any of that is not where it's at. Being a businessman is where it's at. And Jessica Alba, who what do you guys think? Was she like an A-list celebrity? She was a B+ celebrity at some point. She realized the same thing. And think about people like Rihanna. What did she do? She built all her wealth not singing. She stepped away from the limelight. People have been waiting for her album for a decade, for her newest album for a decade, because she's too busy becoming a billionaire because of business. And people are realizing that. I realized that as a YouTuber, as a barber behind a chair. I realized business was the move. And thank God 10 years later, I did that, because before I even made this pivot to just current events and business and wealth and just life improvement, life growth, before I made that move, all the barber YouTubers, their views have gone down. It's just not sustainable forever. Don't get me wrong, I love creating content, I always will, but you gotta have something to fall back on. You gotta have a solid foundation somewhere. So let's look at The Honest Company. It is publicly traded. So look what I'm doing here. So I found on ChatGPT, The Honest Company. Yes, it's publicly traded. And yes, it's owned by Jessica. It was founded by Jessica Alba. I don't know if she still owns it. But I asked him to tell me about this company as if you're talking to the best investor in the world. Now, it's going to use investors that I study, because one thing I love about ChatGPT, now that I've been using it for like a year, is it learns you. It learns, it has a memory bank. And so it knows who I am. It knows the type of investor that I am based on the research that I've done over the year, right? And so it's going to give me an investment thesis the way I would want it, based on my prompts and the memory that it has of my previous prompts. So let's take a look at what it says. The Honest Company, founded in 2011 by Jessica Alba, is a mission-driven consumer. I knew that. Like, it's clean label, eco-conscious, all that good stuff. It raised $413 million in its IPO. So the investment thesis category is leadership in baby and clean personal care. It has distribution with Target, Walmart, Amazon. It's growing its direct-to-consumer channels. There's a high demand for non-toxic freeform products. It has brand equity that the millennial and Gen Z generations trust. So it has like that celebrity brand feel. So they're saying that it's undervalued. The stock trades at $4.48. It has a $500 million market cap. So I got to go look at it. The management has refocused SKUs. It must have had a bad year or something. It's looking like. I got to go look at the financials. But the risk, they're saying, is it's obviously in a commoditized market in personal care. Competitions from brands like Hello Bello, which is bankrupt, Pampers, Pure, and Grove Collaborative. Margins are tied due to inflationary pressures and limited pricing power in some categories, and is dependent on celebrity. Although Jessica Alba is less central now, initial brand identity was strongly tied to her. This is why part of why, guys, I stepped away from doing so much barber heavy content because Tomb 45 was too dependent on me. But now Tomb 45 has 100,000 of its own followers, and it's collaborated with bigger brands like Babyliss. And we're in the hands of other content creators and influencers. And Tomb 45, I think, as a brand, has grown beyond this. And I know that because I go to barbershops sometimes. They don't know who the hell I am, but they know what Tomb 45 is. And that was done on purpose. So I see that is a problem. And the problem with, you don't want a brand that has too much of a key man, okay? Because it's too dependent on that. But it sounds like they're going away from that. Now, they could be one of the opportunities here is for somebody to acquire on the Honest brand. They're hoping somebody like strategic buyers like Unilever, Procter & Gamble would be interested. They also have expansion opportunities into supplements, wellness, and pet care. And then they have licensing deal partnerships with natural lifestyle verticals. Bottom line, Honest Company is in the early innings of a turnaround. It's backed by strong brand equity, growing consumer demand on clean label products, and improving cost structure. It could be a 10x play for a patient investor. And anytime I see it could be a 10x play for a patient investor, I hear opportunity cost. Because while you're waiting for this 10x, could you have your money more focused in an opportunity that can 50x, 20x, 100x, right? Or could you put your money in an opportunity that could 10x right now and it's ready to pop now, right? Nonetheless, let's look at the financials of this company. The stock ticker, again, is HNST. HNST. So let's take a look at that. And so I'll go to my main screen here, and you guys can see, damn, it's $4 a share. Let's see how the price looked over the years. Wow. Whoever bought it in 2021, they hate life. This is why I tell people all the time, don't get excited. Do not buy it at the IPO. More times than none, this is what you see happen. Now, I started cranking back up, but it's back down. Okay, let's see why. Revenues. The company keeps growing. Let's look at quarterly. It looks great here. It's profitable. It had a profitable year. Its first profitable year. It has free cash flow. This isn't good. Earnings per share isn't good. It has a lot of cash. It has no debt. I mean, this is a good sign of a turnaround company. It might be too early for my taste, but it's declining in employees. That's not a good sign. You usually want your employees to grow because a growing business has a growing company. We probably need to look at insider trading to see what's going on here. These are the headlines. Okay. Next, what I would want to do is learn about the CEO. But we can look at its earnings calls. No, my barbers are not slower. My barbers are busy at my shops. We keep marketing, we keep advertising, and honestly, our our ads have been doing better and better. We have been getting an unlimited ROI pretty much on our ad spend. So no, I don't see it. I don't see it slowing down. We're opening another location, and we got 3 opening. We have 3 opening in the next year. So here's the quarterly. They don't have a AI generated one, but you can see the full transcript here, and I can go listen to the call like it's a podcast and see what's going on here. But honestly, it's no pun intended. It looks like there's an opportunity here. Am I ready to start buying it now? No. But thanks for pointing it out. I'm going to put it on my list to be watching. They say it's turning around. But it looks like it's been a growing company. Let's look at compared to somebody like who's a competitor they said? Let me see. Publicly traded competitors. And then let's look at what its PE ratio is right now. What? Negative. It's got a negative PE ratio. Come on, man. Let me see. Sometimes the data here is funky. You gotta double check. Yeah, the PE ratio is non-existent. Okay. What are some competitors? Nope, that's not what I was looking for. This one. Nah, Procter & Gamble is not a competitor. They're huge. Unilever is not a competitor. Estee Lauder, kind of. Kimberly-Clark, this is better. So 40 billion, a billion. Yeah, there's a lot of potential for Honest could be a 100-bagger if you really know the company and the brand. We'd have to do a lot more research than this, but I'm definitely gonna do some more research, and I'm gonna probably react to some videos of the CEO, stuff like that. Thank you for pointing it out. I'll continue to watch them. Thank you, JP. Appreciate it. And man, Leo the Barber, I appreciate that too, bro. I appreciate that too. Guys, that's it for today. Thanks for hanging out with me for 3.5 hours. And I will see you guys tomorrow on my live stream. We live streaming every day.